And Fed Chair Jay Powell pushes back against taper talk. Investors' focuses turn to U.S. bank results. But stocks dismiss the proposed cash injection and look set to turn lower this Friday. Is the economic reality of the pandemic hitting home? There's a human toll for sure. Global virus deaths near 2 million in total. Chancellor Angela Merkel here in Berlin mulls a tougher lockdown as France extends tighter curfew measures nationwide. Let's take a look at futures before the market pops open. We see drops here. So actually, no pops are expected on the global macro mover screen this morning. Let's go ahead and pull that up. If you're sitting in front of a Bloomberg terminal, of course, GMM Go is the way to do that. You see a number of risk assets here. The far left-hand column shows you the equity indexes. I'm still working on that, or with Hillary. I hope Hillary's still working on that. Equity indexes there on the left-hand column. They'll populate as they open up. The IBEX opened down 0.5%. The FTSE down 1/3%. Straight at the top. Usually the DAX takes a little longer. Yesterday it opened pretty quickly. There it is again, opening fast. Down 0.6%. The CAC 40 down 0.6% as well. So looks like buy the rumor, sell the news is what we're seeing after Joe Biden said he will ask Congress for $1.9 trillion to fund immediate relief for the U.S. economy. But maybe it's also because the package risks swift Republican opposition over the big ticket spending on Democratic priorities, including aid to state and local governments, to which Republicans had already objected. Joining us now is our U.S. Senator Kathleen Hunter. And Kathleen, you know, that's not the only thing they'd already rejected. There's a bunch of stuff in this proposal that we know they've already said no to, and apparently President-elect Biden had intended on getting bipartisan support. How do those two things jibe?
Well, I think what we may see here is, and Marco Rubio, kind of the Republican senator from Florida, kicked off the call for this, is essentially this is Biden's big vision for his economic stimulus. And there are elements of it that are intended to appeal to Republicans, specifically, for instance, the $1,400 in additional direct payments of stimulus money to Americans. And I think that the idea is that perhaps there might be a push to have negotiations around a smaller scale piece of legislation, whereas where some of these more bipartisan elements could be included, and then the other elements might be pushed off into a later in the year broader stroke budget discussion. And so I think that's kind of how Republicans are looking at this, and that may be the pattern that we see going forward.
What do we know, or what can we read from this about Biden's priorities as president?
Well, I think that, you know, we can read some things both substantively and stylistically. I think substantively, we know that, for instance, he did also...
Morning to everybody. I'm going to put stop on profit from position that I opened yesterday. Remember, we opened short for Europe, and all of you guys, if you follow my trades, you can put your stop on profit. We put stop on profit at 121.50. Okay, so if the price will change direction, and if it's level, we will sell it profit. In our case, we will have profit £500. In your case, it all depends on what margin broker gives you and how much broker pays you per pip. Okay, all of this you can discover if somebody don't have strategy yet. You can find all information through our strategy. Just get it, read it through, and you will understand everything. Okay, so I pressed stop on profit from 121.55.
And so I think that he is someone that's going to be more of an inside player when it comes to dealing with legislation and getting things done on Capitol Hill. And I think that we see that reflected in the proposal that he unveiled yesterday.
All right, Kathleen, thanks for joining us. Kathleen Hunter there, U.S. politics editor talking to us about what we can expect from this stimulus package and what we can expect from President-elect Biden. Joining us now is Greg Purdon, Arbuthnot Latham, co-CIO. Greg, thanks for joining us this morning. Let me get your take on this. I mean, we knew to expect about a $2 trillion package. We also knew that the Senate is very close and Biden's going to need some Republican support to get through his priorities. What's your takeaway?
I mean, Milton Friedman argued that the U.S. Great Depression could have been shortened had the government been more aggressive. And so I think a lot of the policies being put on the table today are all about trying to implement shock and awe. To try to pay more now to pay less later, and that's the reason why Biden's probably putting this forward. And looking at the plan, trying to yesterday trying to figure out what about it we think is good and what we think maybe is not so good. I think it's a little bit of a mixed picture. Definitely the idea of extending unemployment insurance is definitely a positive for the markets. Why is that? Because the U.S. economy is largely fueled by consumption, and so we need workers to have money in their pockets so they can buy televisions and buy coffees and Starbucks and groceries and things like that. One of the sides which a little bit concerning is in terms of doubling the minimum wage. Seems a bit extreme, and that will definitely create potentially a problem for lots of corporates that employ people. If all of a sudden many of your workers, your labor force is doubling the cost overnight, that could create problems, and so it seems a bit extremist. Maybe it's a negotiation strategy. Maybe he's putting that on the table to then take that off to get buy-in for other parts of the bill. But those are some of our initial reactions.
I will say, you mentioned Milton Friedman. Of course, he championed the idea of the universal basic income. And, Biden wants to send out these checks and raise minimum wage. Maybe that would be a better idea, just as an aside. Greg, what about your investment strategy? I mean, have you been able to look at least the rough outlines of this package and say, all right, now I know the next president's priorities. Maybe I'll tailor my investment strategy so that I can make more money off that in the next 4 years?
Okay, well, part of our job is indeed to make money, so that's a good question. Just in terms of what we've done of late, when the vaccinations were announced, we did change tack a little bit. We did start to buy into the value rotation, not in a big way, modest, just because I've been doing this for so many years and I have seen many false dawns. So just a bit cautious on that. Having said that, there's this trifecta of support for global equity markets across fiscal, monetary, and vaccination rollouts, and certainly that should help. In terms of one of those pillars of support, namely fiscal, the Biden announcement definitely will serve as a catalyst to support equity markets. So we are definitely bullish on equities, and we remain bullish on equities going forward.
Do you think that, are you confident that we're going to see earnings season justify the valuations we're looking at, or is that going to be a couple of quarters out?
No, Matt, your question is spot on. My sense is that the narrative of the market is really going to be looking beyond valuations, at least for the short term. What they're concerned more about is the vaccination rollouts, how successful they will be. Will there be enough dosages? Will they actually work? Will there be take-up? In terms of earnings season, of course, being a professional investor, you cannot ignore earnings seasons. But there's been many times over the years where investors pay more or less attention to earnings. And I think in this instance, I think people are just going to, professional investors will be looking beyond it and focusing more, again, on what I mentioned earlier, which is the trifecta, which is fiscal, monetary, and vaccination rollouts.
It's interesting, Laura Cooper from our MLive blog, Greg, wrote today about the tight range of consensus for equity index gains. I guess analysts at large are predicting the DAX, the FTSE MIB, the CAC all to gain 7%. They're predicting a 6% gain for the S&P 500. So not a very wide range there. The wild card, she says, is going to be the vaccination, the rollouts, and the efficacy of these vaccinations. Are you confident that we're going to see you know, a pretty uniform, homogenous rollout across the U.S., the U.K., France, Germany, or do you think are you worried about some laggards and hopeful for some outperformers?
It just in terms of the equity markets or vaccination rollouts?
Sorry, for the vaccination rollouts I'm talking about. I mean, for right now, even though, you know, there was a time when everyone was saying Brexit's going to mean the UK doesn't even get access to medicine and water, they are doing better at vaccinating their people than anyone else, at least in terms of total numbers, Brexit notwithstanding. But do you think that's going to stay that way? Are we going to see Germans catch up? Or is the U.S. going to, you know, shoot to the moon after Biden takes over? How do you see vaccination rollouts turning out regionally?
I mean, it's a hard question to answer. I mean, just in terms of what we're seeing so far, it appears that the UK is really turning the corner. The numbers in terms of successful vaccinations seem to be quite high. The Delta seems to be quite high, which is very encouraging. And it seems like France is a bit lagging in terms of the amount of take up. And of course, there's a little bit of talk in Germany about their inability for them to secure as many doses as they would have wanted because of their strategy for the distribution. Look, I think in a situation like this, we can just remain hopeful. Biden's come out with some big promises in the package which he announced. I think there's something like 160 billion for track and trace and vaccination rollouts. There's certainly a way, and I think we can just hope for the best.
All right, Gregory, you're going to stay with us. We get more from Gregory Purdon, the co-CIO of Arbuthnot Latham, on the program. Coming up, speaking of Brexit, are you still getting fresh fruit? You can still get fresh fruit, right? And medicine, apparently. Boris Johnson faces a threat to his leadership from rebels who want a clear path out of a lockdown. That is a problem. Greg tells us why he's bullish on UK assets next. This is Bloomberg.
the stimulus doesn't feel very well targeted. There are some some parts of a stimulus that might make sense, that might help make the economy recover faster and be more efficient. But some of this feels rushed out so quickly, you have to wonder if it is being spent effectively.
It may not be this big at the end of the day, but I think it's still going to be a sizable number because people feel like this is kind of the last big kind of CARES Act kind of issue.
We'll see where this goes, but this is an opening bid. There's going to have to be some sort of discussion about their vision for how the public health and the economy play out over the next 6 months to make the case for this package.
Reactions there to Joe Biden's proposed $1.9 trillion stimulus plan. Now, of course, that was pretty much expected, and as a result, markets aren't terribly enthused. You can see red arrows here across the equity indexes 15 minutes into the session. The FTSE down 0.5%, the DAX down 1/3%, and the CAC 40 there down about 0.6%. Now, that being said, we do have some decent gains to start the year, and it's only, what day is it? January 15th, I think? Not 100% sure. But in any case, it's not that far into the year, and we're looking at a 5% gain on the FTSE right now. So it's not a big deal that it's off 0.5% this morning. Let's check on Carrefour, the French grocer price right now. Of course, it's in the middle of what could turn into a takeover battle by the owner of Circle K. Right now, Bruno Le Maire said we aren't in favor of a Carrefour deal, which is pretty clear. He's previously indicated that it would be a concern for the French in terms of food security. Not that they would have a difficult time actually getting food, but that they would be able to control less where that food comes from and who's employed in production of that food, et cetera, and so on. Let's get the Bloomberg Business Flash right now. For that, we go back to London and Laura Wright. Laura?
Thanks, Matt. Bitcoin has recovered from most of the eye-watering losses it saw at the start of the week. The world's largest cryptocurrency briefly topped $40,000 again yesterday. It had tumbled more than 25% in just 24 hours on Sunday and Monday. The rebound is a sign that naysayers were too quick to forecast an end to Bitcoin's surge. SAP says the ongoing effect of the pandemic is likely to weigh on 2021 revenue. It sees annual cloud and software sales declining as much as 4%. The tech company has spent years trying to move away from legacy software and pivot to the cloud. It's seen uneven results and has twice warned that the pandemic will stymie some client deals. London has already seen stock trading upended by Brexit. Fund managers worry they could be next. There's a risk that some asset management could be forced out of London. Firms in the UK handle about £1.4 trillion for funds in the EU hubs of Ireland and Luxembourg. That's nearly half of all fund money managed in Britain. That's your Bloomberg Business Flash. Matt.
Laura, thanks very much. Laura right there with your Business Flash. Still with us is Gregory Purdon, Arbuthnot Latham, co-CIO. We were just talking about, Greg, or I was just talking about the good gains the FTSE has seen so far year to date, despite the Brexit fears, and they were in some ways terrifying at some points over the last few years. It doesn't seem like they've been quite as bad as predicted. Is that going to be a tailwind for British stocks?
Okay, so yeah, just in terms of the UK investment complex, I mean, one of the factors holding, in our opinion, holding international investors back from the UK investment landscape, of course, was sterling. And we took the view that sterling was a buy, also on the fact that there was the prospect for some dollar weakness, and so we've been hedging for the past month or so our dollar back into the pounds to benefit from sterling strength. We did take the view that there would be some form of deal. We didn't know what type of deal, just because both sides would be better economically off with some form of transaction behind us. So that uncertainty has been taken off the table, which in our view opens the door for further investment into the UK. Just because the wild card of sterling volatility hopefully has been to some degree mitigated. This is buttressed by the fact that many of the names in the UK indices are value in nature. So we've seen a little bit of a steepening in the yield curve. We've seen a little bit of a rise in the US 10-year, which does impact investor sentiment towards this sector rotation. There's another factor which does support the thesis that UK major indices should continue to do well, is the fact that the oil market is stabilized. If we start to see increase in mobility because vaccinations are being rolled out, that should mean that more people and more goods and services, more goods are being moved around, which should fare well for the oil markets. And of course, energy stocks should benefit if we start to see energy prices start to go further and higher. So it's a bit of a mosaic, but that's one of the reasons why we are favorable on the UK investment story. And so far, year to date, as you correctly pointed out, the FTSE has done rather well relative to the S&P 500.
It's and of course, it's important to point out how key oil stocks are to the FTSE 100, or at least how heavy they are on that index. I wanted to ask you about some of the other asset classes, and I see in the notes that you've discussed years ago investing in Bitcoin with your committee. What conclusions did you come to, and how do you see it now?
Well, I mean, we did want to invest in Bitcoin many years ago, and the basic thesis was that there was going to only be 21 million of these coins. Now, the issue that we had at our investment committee and the discussion that we had was that at that time we couldn't find a safe way to actually custody the coins. And so we were very concerned about that. And because we are a conservative, a UK private bank, obviously we wouldn't want to do anything reckless with our client capital. So sadly, we did give it a pass. Now that the ability to more safely custody cryptocurrencies is a challenge which has been overcome, it's now back on the radar screen. Whether we'll actually take a position or not, that's up for the committee to decide, but there's certainly much more open-mindedness toward it now that one of those major risks has hopefully been mitigated.
Well, I think it's still a pretty major risk, and I know a lot of people who hold Bitcoin, and they face this problem daily. The custody issue, how to hold it. I know some people who have Bitcoin and can't access it anymore as well, which is maybe equally as difficult. Greg, thanks so much for joining us this morning. Hope you have a great weekend. Gregory Perdon, Arbuthnot Latham, co-CEO, joining us to talk about these markets. Coming up, we'll talk about what's going on here in Berlin. Merkel's CDU is poised to vote for a new leader on Saturday. Tomorrow, we look at the key candidates next. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. We are 24 minutes into the session and looking at red arrows. The FTSE down 0.5%, as I said before, but of course year to date, and it's only been a couple weeks so far, it's up 4.8%. Not a bad gain, even with this drop. Let's get more on one of the major stories that is set to drive markets not only this year, but over the coming years. Angela Merkel's CDU is poised to vote for a new leader this weekend. It kicks off a big political year in Germany. It's what we call a super election year, as the country prepares for national and a lot of regional elections in September as well. For example, Turingen was supposed to have an election, I believe, this month, and because of the pandemic, they have had to put it off. They will now do it in September with the national elections. Let me get an expert's opinion on this, or a judgment on whether or not I'm right. Agatha Cantrill joins us, my producer here, but also somewhat of a political a political nut. Aggie, what is the importance that these elections hold in terms of the direction that Europe's largest economy goes?
I mean, the importance of it is based around what direction the party is going to take, because Merkel has obviously been at the helm of this party for a very long time, and she's been chancellor for over 15 years. And so the party has always had a strong level of support, or a relatively strong level of support, that can often be reflected back on Merkel herself. So when we are looking at this through the basis of how the party is going to go forward, it's whether they're going to go to a more conservative bent, or whether they're going to continue Merkel's efforts to bring the party to the center. You saw, for instance, during the early stages of the pandemic, the CDU's polling got boosted incredibly after lagging for a little while in 2019, and that has been chalked up to Merkel's response to it. But it isn't necessarily
Well, we still have a long way to go, of course. And as Aggie points out to me often, the leader of the party isn't necessarily a chancellor candidate. So let's keep in mind those are two different things. Agatha Cantrill, thanks very much for that. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. We are 30 minutes into the trading day and looking at some red arrows across the board here. Let's take a look at the indexes and maybe even delve into some of the stocks 600 sectors. We've got SXXP, index GRR as a way to put. There you go. Right there you can see they're all down actually. Basic resources, chemicals, energy. These are big heavy weights on especially the DAX and the FTSE, and as a result, you see those two indexes falling the furthest right now. Let's get the Bloomberg First Word News. For that, we go back to London and Laura Wright. Laura?
Thanks, Matt. The Federal Reserve is dampening down talk of a premature reduction in its bond buying program. Chair Jerome Powell says the economy is far from the central bank's goals, adding that the taper tantrum is a good reminder that policymakers should choose their words carefully.
Now is not the time to be talking about exit. I think that another lesson of the global financial crisis is be careful not to exit too early. We'll let the world know. We will communicate very clearly to the public, and we'll do so, by the way, well in advance of active consideration of beginning a gradual taper of asset purchases.
The world is edging closer to a sad benchmark, 2 million coronavirus deaths. And with vaccine rollouts taking time, there are few expectations the daily numbers will start dropping anytime soon. In the past year, COVID-19 has killed more people than malaria and tuberculosis combined. After leaving the White House, President Donald Trump plans to live at Mar-a-Lago in Florida and continue employing some of his current aides. Bloomberg sources tell us he plans to fly there on the morning of Joe Biden's inauguration. One snag for the president: some of his future neighbors are trying to stop him taking up permanent residence. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Matt.
Laura, thanks very much. Laura right there with your first word news. Now, Wizz Air has raised 500 million euros in its first ever bond sale, but the carrier says it's just taking advantage of low-cost borrowing and won't need to touch the proceeds unless the demand recovery is delayed. Joining us now is Joseph Varadi, the CEO of Wizz Air. And Joseph, I was thinking about this before I saw your headlines. As I watched the 10-year yield rise, I thought, wow, if anybody wants to get on these rates, maybe they want to do it soon before we see rates rise around the world. Is that your concern?
Well, I think I'm concerned about two things. One is that the current situation is still very unpredictable. We just simply don't know how the pandemic is going to end and what it's going to really mean to the economy and to travelers, people who wanna fly around. And secondly, obviously, we don't know what's exactly going to happen to the financial market. We're seeing that the interest rate is very low at the moment, and we should be taking advantage of that. Probably there is more downside risk than upside potential going forward. And given the uncertainties, we felt that it would be the right insurance policy for the company.
How concerned are you? We're starting to hear Merkel talk about extending the lockdown, or at least reports that she's talking about extending the lockdown another 8 to 10 weeks from the end of January. It's almost unfathomable that we could have the economy locked down this long, but it seems like it may be a fact we have to live with. How difficult will that be for an airline like yours?
Certainly this is almost like mind-boggling. Who would have thought this could happen when it broke out in March last year? I think everyone with reasonable mind believed that by this time it would be over, and it is not over yet. And even I would say that the outcomes are still very unpredictable in terms of timing and how we're going to get settled on this. Well, we are ready for any scenario. This is the reason why we raised this 500 million euros, just to make sure that even if the worst case scenario happens and 2021 is not going to be any better than 2020, we are still a good business. We remain intact, and we would be ready for the future when actually the business starts recovering.
How much have you had to cut your capacity in response? How badly have you seen sales affected?
This is a roller coaster experience. Last April, we only operated 3% of our capacity. In August, when the markets became quite unrestricted, we were able to push back capacity to 81% level. Today, we are operating around 20% of our capacity. So we are totally subject to the pandemic measures imposed by governments. Obviously, they fundamentally affect consumer demand, and we are just adjusting capacity accordingly.
I want to ask you about Wizz Air Wizz Air Abu Dhabi. I'm sorry, you've begun flights at Wizz Air Abu Dhabi today. How big could that business become? Is there enough demand in the region to support a low-cost carrier?
We are very excited about the operation of Wizz Air Abu Dhabi. It has been a well-prepared and well-aligned initiative together with the Abu Dhabi government. We are investing for the long run here. We're seeing that this market has a tremendous prospect in the future. I mean, if you just take the sheer fact that if you are in Abu Dhabi, you look around in the world, and within a 7-hour cycle, a radius, you're going to capture 5 billion people. So we're seeing that Abu Dhabi represents tremendous growth opportunity for Wizz, and this is what we are starting operating against.
But tough competition, right? I mean, I used to cover the American carriers, and they were constantly complaining about the state support of their Middle Eastern competition. How do you deal with that kind of behemoth?
Well, I mean, first of all, we are a tough competitor as well, and we like competition. Competition offers choices to the consumers, and I think competition makes you a better business. Well, we are part of the Abu Dhabi system now. I mean, we are Abu Dhabi's national carrier, which of course we are very proud of, and we're seeing that we're going to have level playing field. And I also think that the world is changing in that part of the world as well. I mean, there is a lot more expectations for running businesses like airlines on an economically rational basis.
Let me finally ask you if you've had to make any changes due to Brexit, Joseph. There were so many problems forecast, and so far so good, right? How has it been for Wizz Air?
You know, from a market standpoint, Brexit has been a very smooth transition for Wizz Air. We've been able to operate every single flight we were planning on. So I don't think there is any issue with that regard. As we are a London-listed company, we are affected by ownership and control matters falling out of Brexit. We did what we had to do. We had to disenfranchise some of the shares which no longer qualify from a nationality perspective. But that was also very smooth. I mean, you can see our share price development. It was not fundamentally affected by that. So we think Brexit has been as good as it could have been.
All right, Joseph, thanks very much for joining us. Joseph Arati there, the CEO of Wizz Air, on the bond offering, the new business in Abu Dhabi, and Brexit. Coming up, as Italy's government collapses, the virus surges. We'll speak to Walter Riccardi, senior advisor to the country's health minister, next. This is Bloomberg. Welcome back to the European Open. We are 41 minutes into the session and looking at a drop on the FTSE and the CAC Caron of about 0.7%. The DAX now down by just a little more than 1/3%. Banks will be in the spotlight during the final days of the Trump administration, U.S. banks. JP Morgan kicks off earnings season today, but in a move that was not expected, Trump's overseer of the biggest banks is imposing a last-minute rule change that is making some people a little hot under the collar. Joining us to discuss is Bloomberg's Danny Berger. So, Danny, Wall Street not very pleased with this rule change from a president that so far has been pretty helpful.
I think that's part of the reason why they are so angered by this rule change and really surprised, because for the most part, as you say, the Trump administration has been pretty friendly to Wall Street. But this comes when we're just days away from a change in the administration. The Office of the Comptroller of Currency making this change, the head who's now left now stepped down, that he's passed this new regulation, and it effectively requires banks to lend money to controversial companies that they otherwise wouldn't. So companies like gun manufacturers and oil drillers, which of course has ESG implications, but banks also warn that this sets a dangerous precedent where regulation comes down quite quickly without consulting any of the parties involved. Now, one of the major trade organizations of lenders is fighting back against this. There have been lawsuits threatened, and he says the rule lacks both logic and legal basis. It ignores basic facts about how banking works, and it will undermine the safety and soundness of the banks. It is unlikely to withstand scrutiny. Of course, there is little banks can do at this point now that the regulation has gotten passed. Again, they've taken to really writing letters, threatening lawsuits. That's all they can really do at this point, Matt.
Bank earnings kick off today in the U.S. What can we expect?
Well, will be interesting just to see any commentary these banks have about the incoming administration, how that will change things for them, what the stimulus means for their bottom line and the health of the economy. Trading, though, is going to be in major focus as it was last year, because essentially what analysts, investors want to see is banks retain those really strong trading numbers, really strong numbers for their markets division, and then do away with the bad. The bad, of course, being things like bad loans. They are expected to have surged 20%. For the latest figures, according to Credit Suisse. However, that is better than what some had expected. So we want to see if the economy is getting stronger, and they can do away with some of those loan loss provisions, which ultimately flow down and help their bottom line, Matt.
Danny, thanks very much. Danny Berger talking to us about the all-important banks. Now, they're not all important, right? We have to be alive to use this financial system, and we're facing a serious health crisis. Italy's government is facing a dramatic political impasse at the same time. After Prime Minister Giuseppe Conte lost a working majority, he will face confidence votes in Parliament next week. The crisis could hardly come with worse timing, obviously, especially in this country, which is battling a worsening pandemic. Italy has recorded over 80,000 COVID deaths so far. Joining us now is Walter Riccardi, senior advisor to Italian Health Minister Roberto Speranza and a public health professor. So this is, Walter, a perfect storm, really. I mean, in the worst sense. And now it looks like it'll be necessary to extend the lockdown. Here in Germany, they're talking about another 8 to 10 weeks. I think you want to extend it another 2 months as well. Doesn't that do? Isn't it possible, or are you worried about the side effects? You know, not just the mental health, not just the economic, but the mental health damage that could be done.
Yes, there are this serious concern, but honestly, we have to stop the virus, and we have to stop before the arrival of the so-called British variant, which is even more contagious. So when you are not able to contain the virus anymore, you have to mitigate. And what all the countries, including Italy, yesterday the government approved a decree to do that. We have to lock down. We have to limit the mobility of the people, because the virus goes on the shoulder of people. And if we block at this moment, we hope that this can improve not only the health situation, but also the economics, because there cannot be economy without a good health, both at individual and collective level. So we are confident that these measures can do that.
Now, you've got at the same time this political crisis. Are you concerned that that will derail your effort to contain the virus to the extent that you can and to roll out the vaccine?
I'm concerned, but I'm also optimistic. I hope that next week the crisis could be resolved in the parliament. As far as I understand, there is the possibility for this government to continue, and I'm confident that the Minister of Health is going to stay because he has granted very, very much the stability and the decision-making based on evidence, on sound scientific evidence. So I'm confident that next week we can start again to focus on resolving the health situation and not the political crisis.
What is your assessment of Italy's vaccine rollout so far? It's been slow going, but it's obviously a daunting task.
At the moment, Italy is going pretty well because we are vaccinating healthcare workers, and actually we are the first in Europe. In less than a month, we have vaccinated almost 60% of the healthcare workers. I'm a little bit more concerned about the mass population vaccination, which should be started in March. And of course, this is an immense challenge for us, and we have to be prepared, and I think we have to catch up a little bit.
I wonder what your take is on, and we've had Bloomberg Opinion writing negatively about this, the UK spacing out vaccines. It's not been clinically trialed and maybe won't work quite as well. Is there a possibility that Italy would follow that?
I'm strongly advising against it because we have to trust the regulatory agencies. They have evaluated dossier on the basis of clinical trials. If we don't do that, we are going to make trials on people, and this could harm the trust that people already have in science, technology, and specifically on vaccine. So we have to be strict with the regulation, and we have to comply with the kind of result that we have seen are working and makes vaccine safe and protective. And we don't have to change this.
All right, so considering that, when do you think we can expect Italy to be properly vaccinated to the point of, herd immunity?
No, I think herd immunity in general will be something that Italy and the rest of the world will achieve later this year, hopefully. But it depends on the fact that we keep vaccination on a very good pace because the British variant can really harm this. If British variant is taking over, the so-called Spanish variant, we have to vaccinate almost 95% of the population, while with the current variant, we can stay happy with the 70-80%. So it's going to change dramatically, and we have to speed up the vaccination now. So I think that we can vaccinate 20 million of Italians before summer and approximately 25 after summer, and reaching possibly the herd immunity in October, November. But this is a challenge that, of course, it happens if we win this challenge.
All right, Professor, thanks very much for your time this morning. Really appreciate you joining us. Walter Riccardi is Senior Advisor to Italian Health Minister Roberto Speranza and, of course, a public health professor. Coming up, how would faster inflation affect the markets? We'll put that question to MLive's Ven Rom next. This is Bloomberg. Welcome back to the Open. We are almost an hour into the session, still looking at red arrows across the board here. The FTSE down 0.6%, the CAC down about 0.7%. So kind of a buy the rumor, sell the news trade in terms of the Biden stimulus package that may have been expected. And of course, we've seen some decent year-to-date gains on all of these indexes as well. Joining us to talk more about the markets is Bloomberg MLive's currency and rate strategist, Ven Ram. Then, you know, one of the, so yesterday we were waiting for two big speakers, really. Joe Biden, president-elect, and Jerome Powell, Fed chair. The latter, I guess, is even more important to your wheelhouse because he was pushing back against the taper talk. What do you expect in terms of that discussion as we see, you know, inflation pick up and as we see the dollar continuing to lose ground?
Morning, Matt. I think that Powell's guidance on Thursday that will communicate any intent to taper purchases well in advance shouldn't surprise anyone, and definitely not the inflation hawks in the market, because, as you know, he said that we need to get through the other side of the pandemic despite progress on the vaccine, let alone see a recovery solidify. So I think that rates are likely to climb modestly this year, priced by the swaptions market, especially at the long end. As long as the pace of increases in yields is moderate, I think the Fed is unlikely to stand in the way of price discovery. But I think that Powell's speech mainly flags the bull run in inflation break-evens and, to some extent, gold as well, because basically the Fed is going to tolerate above-average inflation over the next 1 year. So, which means that nominal rates are going to go up, inflation break-even rates are going to go up, gold is going to go up, you would imagine. Matt?
Here we see a chart of break-evens that we've been using this week, and it's pretty striking. Ven, I know on the MLive blog today, you're asking how would faster inflation affect markets? And I'll tell you what, I have a lot of viewers, well, I have specific viewers who've been telling me there is so much inflation that we're not seeing, but they've been telling me that for my entire career. What kind of inflation do you actually expect, and how will it affect markets?
Well, I think your friends are spot on, Matt. I think that we are seeing inflation embedded in so many of the asset prices, which the Fed and the other central banks around the world tend to overlook, as though those asset prices didn't matter. If you look at house prices anywhere in the world since the start of the millennium, they have surged many fold. And is that not inflation? Does that not affect the common man? Yes, those do affect, but somehow the central banks don't count them as inflation. But to come back to more pertinently to what Powell said, I think that we are going to see the long-end rates go up, especially the 30-year maturity, to a great extent. The 10-year rates will follow suit as well. And as I said, as I mentioned earlier, I think that we are going to see a bid on break-even rates in gold. And that would ironically, would you guess, put a bid on Bitcoin as well, you would imagine.
Yeah, absolutely. Ven, thanks so much for joining us. Ven Ram there is Bloomberg's MLive currency and rate strategist. Check out the blog for his work and the work of his colleagues. Just type MLIV go. That's it for the European market. I'm headed over to radio. You can tune in on London DAB.
President-elect Biden unveils his long-awaited stimulus plan. The aid package totals nearly $2 trillion. Well, we'll have more on that. Global virus deaths near 2 million. France tightens restrictions. Germany may follow. And shares in Xiaomi plunge. The Trump administration blacklists China's smartphone giant in a surprise move. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lackley here in London. Now, there's a lot of news going on, of course, on the politics front. We've been following that very closely over the last 2 weeks, and it certainly is having implications for the markets. Now, the reflationary trade is probably the big story that we've been focusing on over the last couple of weeks. I would point everyone to some of our Bloomberg opinion pieces that have really been outstanding in trying to figure out the difference between reflation and inflation that we could see. Now, stocks slipping. If you look at yields, they're also a little bit down. The dollar pushing higher. Again, Treasury yields dropped. Almost all industry groups here in Europe opening lower, with only defensive technology stocks in the green. I guess optimism about the aid package from the U.S. has now turned to maybe a bit of concern that it could be watered down under congressional opposition, and also concern out there that we could see some taxes rising in the U.S. Now let's get straight to the Bloomberg. First word news. Here's Leanne Garrett. Hi, Leanne.
Good morning, Francine. The Federal Reserve is dampening down talk of a premature reduction in its bond buying program. Chair Jerome Powell says the economy is far from the central bank's goals, adding that the taper tantrum is a good reminder that policymakers should choose their words carefully.
Now is not the time to be talking about exit. I think that another lesson of the global financial crisis is be careful not to exit too early. We'll let the world know. We will communicate very clearly to the public, and we'll do so, by the way, well in advance of active consideration of beginning a gradual taper of asset purchases.
After leaving the White House, President Donald Trump plans to live at Mar-a-Lago in Florida and continue employing some of his current aides. Bloomberg sources tell us he plans to fly there on the morning of Joe Biden's inauguration. One snag for the president: some of his future neighbors are trying to stop him taking up permanent residence. And another successful test mission for Blue Origin, the space company of Amazon founder Jeff Bezos. The rocket took off from Texas, this time carrying a life-size dummy called Mannequin Skywalker to the edge of space. He will one day be replaced by space tourists at the cost of $200,000 a seat. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now let's get to our top story. And President-elect Joe Biden will ask Congress for $1.9 trillion to fund immediate relief for the pandemic-racked economy.
This stimulus doesn't feel very well targeted. There are some some parts of a stimulus that might make sense, that might help make the economy recover faster and be more efficient. But some of this feels rushed out so quickly, you have to wonder if it is being spent effectively.
It may not be this big at the end of the day, but I think it's still going to be a sizable number because people feel like this is kind of the last big kind of CARES Act kind of issue.
We'll see where this goes, but this is an opening bid. There's going to have to be some sort of discussion about their vision for how the public health and the economy play out over the next 6 months to make the case for this package.
Now, joining us for more on this is our senior writer, Stephanie Baker. Stephanie, how many surprises were actually in the relief package?
You know, I don't think there were a lot of surprises, actually. I think it was along the lines of what we were expecting. I mean, of course, the headline number, 1.9, is huge and almost as big as the CARES package passed in March. I mean, the $1,400 checks, you know, one-off checks for those under certain income thresholds that had been hinted at, that, you know, this is something Biden wanted to do. You know, I think he also wanted to provide more funding for state and local governments, and that was in that package, $350 billion, and a lot more money for this national vaccination program, which I think is really key to getting the economy moving again, making sure that there's enough money, you know, because in the U.S. the problem is not lack of vaccine supply like you have in the UK. It is really about infrastructure and people and organizational, skills to get it out to in as many arms as possible. The real question now is how many Republicans will support it. It's likely to pass in the House at this number. It may be revised downwards in the Senate. As you know, the Democrats only have a simple majority in the Senate, and so the question is how many Republicans would back it, and do they go and try to pass something really big through something called budget reconciliation to get around the Senate filibuster, which requires 60 votes to pass anything. And that seems pretty likely that they will go down that route and try to push through a really big package just with a simple majority through budget reconciliation.
So, Stephanie, given where we are, if he doesn't, if it doesn't appeal to moderate Republicans, then do we have any idea of what could be voted on without going the route you were just mentioning? How much smaller would the package have to be?
I think they've always balked at this, larger one-off checks to individuals, and they've also, opposed additional funding for state and local governments. And I would think that would be where you would see a downward movement to try to negotiate some sort of compromise deal. I think Republicans will argue that this is, reckless spending, even though, some of the moves that they had made earlier in Trump's term, expanded the deficit significantly. Whether or not they will push for a promise to raise taxes in other areas, is unclear. I don't think Biden is planning to go ahead with anything along those lines of tax rises in the immediate future. He's planning to pay for this through deficit spending, through additional borrowing. So it remains to be seen what are the kind of things that are, traded during the negotiations.
Thank you so much. You're Stephanie Baker there, our senior writer, of course, following the White House very closely. Now, coming up, we get more on the market reaction to Biden's nearly $2 trillion stimulus plan. As Stephanie, we're just saying it could be watered down. We could see some kind of agreement on other things. So we'll have plenty more on dollar dynamics, given what we heard from Joe Biden. This is Bloomberg.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Bitcoin has recovered from most of the eye-watering losses it saw at the start of the week. The world's largest cryptocurrency briefly topped $40,000 again yesterday. It had tumbled more than 25% in 24 hours on Sunday and Monday. The rebound is a sign that naysayers were too quick to forecast an end to Bitcoin's surge. Now, SAP says the ongoing effect of the pandemic is likely to weigh on 2021 revenue. It sees annual cloud and software sales declining as much as 4%. The tech company has spent years trying to move away from legacy software and pivot to the cloud. It's seen uneven results and has twice warned that the pandemic will stymie some client deals. And London has already seen stock trading upended by Brexit. Fund managers worry they could be next. There's a risk that some asset management could be forced out of London. Firms in the UK handle about £1.4 trillion of funds in the EU hubs of Ireland and Luxembourg. That's nearly half of all fund money managed here in Britain. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Now let's get back to the markets. Joining us this morning, Peter Garnery, Head of Equity Strategy at Saxo Bank. Peter, we probably need to start with this huge stimulus package that Joe Biden announced yesterday with the details that we're going through. Peter, there seems to be, I don't say a disappointment in the market, but certainly nothing that they want to write home about. Is this because we heard yesterday about the extent of the money, or is there a concern in the markets that he won't be able to get it through, or is it because they now worry about tax hikes?
Well, I think most of the size was already discounted in the market, and now we got the details on what actually they want to put into that plan. And I think some of it, you might call it too socialistic maybe for some Congress members, and that could be an issue, getting the entire stimulus plan through in its current form. But having said that, we think a little bit this is just noise. We will get a stimulus plan, and what the eventual size will be and all the details we'll have to see. But we can't help thinking that as we move forward this year, we'll get even more stimulus, potentially to the degree where we get actually a policy mistake in the sense that it actually triggers inflation. And that's why we have coined reflation as the dominant theme to watch and to guide markets this year. We think that governments around the world, especially in the major economies, they basically will move or has moved to a goal-based policy where they will continue to push stimulus both on the fiscal and the monetary side until employment levels and corporate profit levels are back to where they were before the pandemic started back in early last year. So, and if you're right about that, then in the reflation trade scenario, you'll have higher inflation. You will probably also have higher long-end yield curves. Longer yields will go up. That will have an impact on technology stocks and mostly the very speculative parts of the market because they're the most interest rate sensitive. And you want to be long financials and stocks with exposure to the commodity sector.
But, Peter, is there a confusion in the markets between reflation and inflation?
I very much use the, you could say the reflation is basically when prices begin to rise. And I would say when people talk about inflation, that is sort of have a negative wording. So in my book, reflation is what we had first, and then inflation is when you have a sustained gain in the price level, and we are above maybe 3.5%. Then we can talk about having real inflation in the economy, and that's also where historically equities have begun to be a little bit more shaky. That's above that 3.5 percentage point threshold, because that's where inflation begins to become what Warren Buffett in the 70s coined as sort of a tax on capital, and it really raises the bar for return on capital, which will be difficult for a lot of companies because most companies, unlike some of the big technology companies, they don't have the bargain power to set prices. So we'll have to see, but we stick with this reflation that we will continue to see prices higher. And we've got several confirmations of this. The Chinese PPI, which arguably together with energy prices, the most important one, is also moving higher. So we think it's coming this time.
Peter, is there a worry that actually, before we see inflation, there's just a repricing of treasury yields? And even if that level is not that big, if they get there too quickly, that also, warrants a repricing for a lot of other asset classes.
Yeah, so I think what worth keeping in mind here. So when interest rates move higher, they can move higher for a lot of different reasons. And I think the tug of war in the coming months will be how much of the interest rate move higher will be driven by inflation expectation and realized inflation, and how much of it is actually lifting growth expectations. And if you look at the technology segment in the global equity market, the way they have responded, I would say that the market right now is discounting that the two forces are quite equal to each other. So the increased growth expectations are offsetting the negativeness from higher inflation. But as we move higher, we think that the force from inflation will be the dominant one, and that will begin to be negative, especially for technology stocks. We're not so much worried about the very large companies in the NASDAQ 100, but we have definitely a large and increasing speculative, what we call bubble stock segment, and those stocks with enterprise value to sales ratios above 10, those are the ones that will be the epicenter of the correction when we get to that inflection point with high interest rates and we begin to see the hit to technology stocks.
So, Peter, where do you see the most value? I know a lot of the narrative over the last 3 to 4 weeks was actually the Russell 200 and what that would do compared, for example, to the Dow or the S&P.
Yeah, so the problem with the Russell 2000 is already very expensive, and I think if you look at the market and how they're placing their bets relative to all the stimulus that are coming through, I think the majority of the stimulus will flow from the U.S. into demand for China because they're the world factory. So we think that the emerging markets will actually do much better than the U.S. small caps. There's still a lot of sort of constraints in the U.S. economy still that won't be necessarily listed, and you're starting if you invest in small caps from a very high valuation point. So emerging markets much more interesting, and we think the commodity sector, which is on a relative basis extremely cheap and has underperformed massively compared to the rest of the equity market for almost a decade, we think is primed to see a big repricing. We think there will be continuous supply chain bottlenecks that will drive higher prices for commodities across the supply chain. That's because of the U.S.-China tension, but also because we have underinvested in the physical world because of the success in the online world. So a lot of capital have flowed to the digital world, and we now seeing, I think, some of the impacts from that underinvestment in the physical world. And if you take those constraints on the supply side and you couple that with stronger demand going forward over the next 2 years because of all this stimulus, and we'll have a successful vaccine rollout, then you have a perfect combination for why the commodity sector will see a boom.
Peter, yeah, I was just looking actually at the 2000 right now. I think I misspoke. It's at 200. It's been a long week for really everyone. Peter, are you just expecting a lot more volatility as we get onto inauguration, and then you're expecting to trail off, or is it just, too much unknown, even the relationship between the U.S. and China?
Well, I think the U.S. and China will continue to get worse. I don't think the Biden administration will be any much softer than the Trump administration. I think the Democrats very much have agreed to the policy line of the Republican Party that China is the foremost competitor, and there's an unevenness in the global trade balance. You just saw a record high trade surplus for China the other day. So I think there will continue to be some volatility coming out from that factor. We're not so worried about the inauguration. I think it will be mostly noise at this point. We have a general worry that typically the VIX index and the volatility market has been used as a risk management tool, but we can clearly see in the volatility market there has been a structural shift in 2020, and it's obviously driven by the pandemic, but there's also this force from increased retail investor participation, specifically in the options market, and they're buying a lot only call options, basically with only week and 1 month expiry, and that has created this positive feedback loop, which basically you see in a lot of technology stocks, including stock like Tesla. That has our attention and worries us.
Peter, thank you so much. Peter Garner there from Saxo Bank. Now, coming up, Wall Street fumes over a last-minute rule from Trump's top bank watchdog. We discuss that next. This is Bloomberg.
longer going to raise interest rates just because, for example, if unemployment were to be well below our current estimates of the natural rate of unemployment, that wouldn't be a reason to raise interest rates unless we see troubling inflation or other imbalances.
Well, that was the Fed Chair, Jay Powell, speaking. He pushed back, of course, on taper talk in yesterday's webinar. Now, banks are in the spotlight during the final days of the Trump administration. JP Morgan will kick off earnings season today, but in a move that was not expected, Trump's overseer of the biggest banks, this is also imposing a last-minute rule change. Now, joining us to discuss is Bloomberg's Danny Berger. Danny, first of all, if you look at the rule, I mean, this is basically forcing companies to lend no matter ethical decisions. So they would need to lend to, climate denying companies, to gun manufacturers and the like. Wall Street is not pleased.
Yeah, that's probably an understatement. So yeah, as you say, gun manufacturers, oil drillers, throw in another very ESG friendly one into there. And it's not just that a lot of these banks had previously refused to do business with these types of companies, Francine. It's also a concern about the type of precedent it sets. Does this mean that we can have more last minute regulation where we're not really consulting the parties that have a heavy interest in these sorts of things? Now, this comes, of course, as the banks are preparing just days away from the Biden administration coming in. And part of the confusion and anger coming from the lenders is that before this, the Trump administration had been pretty friendly to Wall Street. So it comes as a surprise in that way. We've also heard the head of one of the big trade associations of these banks just really challenge this, saying the rule lacks both logic and legal basis. It ignores basic facts about how banking works, and it will undermine the safety and soundness of the banks. He goes on to say it is unlikely to withstand scrutiny. Withstanding scrutiny, though, Fran, at this point, there's not really much they can do. They have threatened lawsuits. They've been writing letters, but at the moment, that's really the extent of actions they can take, Francine.
Yeah, I mean, this is like the plumbing, Danny. You don't really think about it until something happens. Can Biden actually reverse this, or does it have to go through, the process without turning back straight away?
Well, presumably we do have someone new in this chair. After all, the chair of the Office of the Comptroller of Currency did step down after putting through this regulation, but it is a big process to try to reverse some of these things. And it will be interesting to see on the earnings calls, which kick off today, to see if banks mention this at all, or at least their outlook for Biden administration, whether they will be more friendly. Of course, a Biden White House has a large concentration on climate, so this could be a concern, Francine.
Thank you so much, Danny Berger. And of course, we do have also quite a lot of earnings coming up, so we'll talk about that a little bit later. Now, coming up, in battle, the Prime Minister of Italy, Giuseppe Conte, loses his majority. We'll discuss the prospects for the country as the government teeters on the edge. This is Bloomberg. another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get to your first word news. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. President-elect Joe Biden is planning an immediate $1.9 trillion of aid for the U.S. economy. He also plans to lay out a second, broader recovery package at a joint session of Congress next month. The president-elect admits the proposal is expensive, but says America can't afford not to act.
The crisis of deep human suffering is in plain sight. And there's no time to waste. We have to act, and we have to act now.
Now the world is edging closer to a sad benchmark, 2 million coronavirus deaths. And with vaccine rollouts taking time, there are few expectations the daily numbers will start dropping anytime soon. In the past year, COVID-19 has killed more people than malaria and tuberculosis combined. Now there's little clarity on when President Trump's impeachment trial will take place. House Speaker Nancy Pelosi has signed the single article of impeachment, but hasn't said anything about the schedule for sending it to the Senate. Both Republican and Democrat leaders have been silent on how the Senate will handle trying a president after he does leave office. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now let's discuss the latest on Italy's deepening political crisis. Prime Minister Giuseppe Conte is racing against time to forge a new majority, with the day of reckoning set for Tuesday in a vote in Italy's Senate. The Prime Minister is facing a dramatic political impasse sparked by former Premiers Matteo Renzi's withdrawal of his party from government. Now the move robbed Conte of a working majority, leaving his administration teetering in limbo. Well, joining us now is Paolo Scaroni. He is Deputy Chairman of Rothschild Group, also Chair of AC Milan, and he was previously the Chief Executive of energy company Eni. Paolo Scaroni, thank you so much for giving a bit of your time to Surveillance. When you look at the complexity of Italian politics, a lot of people outside Italy feel like they really don't know what will happen in the next 7 days. There are a number of options. What do you think is the most likely scenario?
Well, Italian politics are complex also for Italians, I have to say, even for me. But if you want my forecast, I believe that we will find a new majority on Tuesday at the Senate, a new majority made up by what we call responsible MPs, that is, MPs which are from other parties, with Mr. Conte majority. This is the most likely scenario. By the way, some senators of Mr. Renzi as well declared that they are ready to vote for Mr. Conte. So I believe we will have another run for Mr. Conte in the next few months.
But does it weaken his hand to actually decide what happens with the recovery fund money that the EU gives Italy? Does it make it just everything a bit more messy?
Well, yes, it doesn't simplify the situation. Of course, the whole subject we are discussing in the business community is how the government will deal with the 209 billion euros, which are part of what we call Next Generation Fund, and for which we do not have the impression that the present government has yet prepared what we need to present to the European Union in order to have this money. So I hope that for Mr. Conte government will be much more active on this front. For the time being, it has been taking care of the COVID situation, but not much of the future.
Paolo Scaroni, what is the biggest concern right now for Italy? I mean, there's a number of rumors flying around saying also maybe a technocratic government would be better. A lot of international investors, always hoping that Mario Draghi would take some kind of role in Italian politics. But what is the main challenges for the next 6 months? Is it vaccination? Is it government help for failing businesses, or is it just a recovery fund to relaunch the economy?
Well, of course, the big challenges are two. First of all, how we deal with the COVID situation, which in Italy is not as dramatic, but it is very, very painful. And this is one. And second, how we deal with the future. The Italian economy was performing poorly even before COVID. Imagine now the Italian economy is dealing. Now, we need to use well this 200 plus billion euros in order to change completely the Italian economy, to make it more competitive, more productive. Now, we do not see much yet from the government on this front. Now, as far as Mario Draghi is concerned, I don't know what Mario Draghi thinks. Everyone would like to have him playing a role in this dramatic moment for our country, but I don't think it's still his time. Italian politics now, we are concentrated, are focused on next year presidential election, and for a few months before this election, nothing will happen in politics. So I'm not expecting Mr. Draghi to play a role short-term in politics.
Paolo, the line drops sometimes for the internet, so I hope you can still hear me. But I wanted to ask you also about oil and OPEC, because it's been quite significant 2 weeks, also with U.S. politics. I mean, it just seems like 2021, we're not short of news. Where do you see demand, but also agreements within OPEC going to keep a handle on oil?
I'm fairly optimistic about the oil price because there has been a demand rebound. Demand in 2021 will be at least 6 million barrels a day higher than in 2020. And at the same time, Saudi Arabia showed clearly its intention to cut down production in order to keep prices at a certain level. As a result, prices of Brent are now around $55 a barrel. And I believe this price will stay on, maybe go a little higher in the next few months. There is a ceiling then, which is probably around $65, $65, which is the price at which shale oil in America will start again to increase production. So I see oil prices between $55 and $65 for 2021.
What do you think world businesses, global businesses, Italian businesses, European, but also American ones need to focus on right now? We're 2021, we're still dealing with the pandemic. We'll see as vaccines work. But how do they adapt to this new reality?
But some businesses have been adapting pretty well already. There are businesses which, as a matter of fact, have been enjoying the crisis we have been living through. Other businesses are totally collapsed. Of course, tourism, hotelry, travel, everything needs to sort out the issue of COVID in the world before they start all over again to grow as has been growing in the last few years. I have to tell you, I'm fairly optimistic about the vaccine because production should be growing rapidly. Pharmaceutical industry has shown the capabilities not only of making research, but also of producing what we need. So I'm expecting that in 2021, the COVID situation will be behind us and the economy will be rebound, even in the sectors which have been suffering so much for COVID.
Paolo Scaroni, I need to ask you about football, otherwise I won't come out of the newsroom alive. There's so much, of course, interest in the newsroom about Italian football. There's some clubs that are facing liquidity issues because you don't have the revenues from spectators because of COVID. How do you see this playing out in Italian football?
Well, let me say first that Milan is at the top of the league. We are enjoying very much this position. Nobody would have expected that. Now, in economic terms, yes, all of us, we are suffering. All over Europe, we are suffering. And I do not see any solution if we do not solve the COVID issue. We need to have people going again to the stadium for many reasons, including for economics. We are suffering, all of us. I hope 2021 will be the end of this unbelievable situation in which nobody is going to watch football matches all over Europe.
But do you think private equity funds will take more of a stake in even some of your rivals?
They are very active. They are very active both at the level of the clubs, but also at the levels of the leagues. You know that in the Italian league, there are 2 private equities or 3 private equities which are ready to take a stake in the media company owned by Serie A, by the League of Serie A. And I'm expecting more and more intervention of private equity in the world of football, because the world of football can be cash generative and profit generative for everybody, including for private equities, which showed a great interest towards the European football clubs.
Thank you so much, as always, Paolo Scaroni. And enjoy the match tonight. I'm sure you'll be watching, like most of us. Certainly, my executive producer will be Lazio-Roma. That's tonight. We'll have plenty more, of course, on the markets shortly. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Acqua here in London. Let's get straight to the Bloomberg Business Flash. Here's Leanne Garens. Hi, Leanne.
Hi, Francine. Bitcoin has recovered from most of the eye-watering losses it saw at the start of the week. The world's largest cryptocurrency briefly topped $40,000 again yesterday. It had tumbled more than 25% in 24 hours on Sunday and Monday. The rebound is a sign that naysayers were too quick to forecast an end to Bitcoin's surge. London has already seen stock trading upended by Brexit. Fund managers worry they could be next. There's a risk that some asset management could be forced out of London. Firms in the UK handle about £1.4 trillion for funds in the EU hubs of Ireland and Luxembourg. That's nearly half of all fund money managed here in Britain. And more than a year before Wirecard imploded, executives at Commerzbank did have their suspicions. According to a testimony at a parliamentary hearing in Berlin, the lender flagged money laundering concerns to German authorities. It then told the regulator of its decision to end its relationship with the payments company. SAP says the ongoing effect of the pandemic is likely to weigh on 2021 revenue. It sees annual cloud and software sales declining as much as 4%. The tech company has spent years trying to move away from legacy software and pivot to the cloud. It's seen uneven results and has twice warned that the pandemic will stymie some clients' deals. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, tech valuations may be skyrocketing to new highs, but Warburg Pincus is still interested in more deals. The firm's Europe co-heads, René Obermann and Adarsh Surma, spoke with Bloomberg's Danny Berger about their outlook for private equity markets.
A couple of things the crisis has made very clear. For instance, we are lacking digital infrastructure in Europe, in many markets in Europe, in many regions in Europe. And therefore, we have invested in a company in the UK called Community Fibre, and they're building high-speed internet connectivity to households which are kind of underprivileged, and they do that for very affordable rates. So it's a very purposeful activity, and eventually it will be also profitable.
I know you guys are exposed a lot to financial services. Are you concerned that the transition period ended and we didn't get any sort of equivalence?
Yeah, it's a good question. I think a lot of markets are creating, or at least standing by the existing agreements, at least through March, April, when the final agreements are supposed to be done. We have we just made an investment in Tilney Smith Williamson over the crisis, which is an asset wealth management business. We also have a broker business in McGill. And both of these have other ways to make these markets work. Tilney is just focused on the UK, so I think that's okay. But for now, we're waiting and watching.
Are you concerned at all, though? What are the sort of things that keep you up at night now that we've left and the transition period has ended?
I think the long-term effects remain to be seen. I think the jury is still out. For instance, the logistics and supply chains, how they hold up when they are being more stress tested. At the moment, the traffic volume are fairly low between the borders. When that goes back to the normal level of like 10,000 trucks a day or so, then we'll see how the new system will work and whether both sides on the channel are prepared for it. So that's an area we keep closely watching. Overall, it's very hard to say, but I think we look at the micro level rather than the macro level. We look at companies and sectors and subsectors, and do not focus too much on the big picture. And we'll find a lot of attractive opportunities both in the UK as well as on continental Europe.
Let's get into some of those sectors then. Tech, of course, is one that's always top of mind. How do tech valuations look to you right now? Are they too frothy both in the public and private spheres?
So the public or the private valuations today, while they're quite high, I think if you look back at 19, you'd say the same thing. You'd say valuations were at peak at that point, and you'd say the same thing the year before. So I think it's really a function of the micro level. It's the asset selection and the sector selection that we do that goes to sort of helping us over a 5 to 7 year period.
If in that scope valuations have a different meaning to you, does that mean that take privates are interesting to you right now? I know you've had them in the past, Inmarsat, of course, being a large one. Are you interested in more of those types of deals?
Yeah, we are. And partly because in some of these companies, the change that needs to happen in the company is hard to do in a public setting. So, one is valuation, but really what it comes down to, whether it's Inmarsat or some of the other ones that are in the market now, we look at them and say, what is the change that what is the transformation that these companies need to do over the next 5 to 7 years? And are the current public market investors patient to be long-term investors? Because, sometimes what happens is the earnings have to come down. You have to invest in R&D. You have to do organic product roadmaps. And that takes the margin of these companies down. You have to sort of change the on-prem perpetual license model to SaaS, and long-term subscription revenues come down. We are able to do that in a private setting. So it's those types of companies we're really interested in a public context. And the public to private will continue.
Well, those were Ardush Sirma and René Obermann, Europe co-heads for PE firm Warburg Pincus, speaking to our very own Danny Berger. Now, coming up, Xiaomi shares plunging today. That's after the U.S. blacklisted the company, broadening efforts to undercut the expansion of China's technology sector. We'll bring you that story next. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
We've been encouraging countries to use what we call trusted partners. Ones that are not going to put a back door in, ones that are not going to take advantage of frequent upgrades to infiltrate your system, ones that will not take advantage of the maintenance of your system to infiltrate bad things.
U.S. Commerce Secretary Wilbur Ross there speaking to our David Weston. Now let's keep it on the trade war, and Xiaomi shares plunging 11% after the Trump administration blacklisted the company, broadening efforts to undercut the expansion of China's technology sector. The U.S. has targeted scores of Chinese companies for the stated purpose of protecting national security, but going after Xiaomi, the country's #2 smartphone maker, was unexpected. Let's get the latest now with our chief Asia economics correspondent, Enda. First of all, good morning to you. Thank you so much for joining us. What exactly is the significance of this?
Well, good morning, Francine. I mean, Xiaomi is seen as China's answer to Apple, quite apart from smartphones that you mentioned. It also makes electric scooters and earphones and smart rice cookers, so it's one of China's leading brand names. It is, of course, also the latest now to be targeted by the U.S. on grounds of national security. The U.S. Defense Department identified Xiaomi along with 9 other companies as having ties to the Chinese military, and that means American investors will be prohibited from buying their securities, and they will have to sell whatever holdings they have by November. Now, Xiaomi joins China's 3 biggest telecom firms who are already on that list. The company themselves have said they are not owned or controlled by the Chinese military. They have said they will take actions to protect its interests. And before I came on air this evening, the Commerce Ministry in Beijing made similar remarks that they don't agree with this decision and that they will take steps to defend China's own national interests.
Are the Chinese hoping that the Biden administration will actually reverse this?
Well, this is the big talking point, Francine. I think the broad view in this part of the world is that while Biden will stick with some of the hawkish policies that the Trump administration have pushed through, the tone might at least change and perhaps take on a different, maybe perhaps become more constructive. But I think the broad assessment is that whichever U.S. president now is in office or whichever administration is in place, they are going to remain hawkish. It will be difficult for them to roll back a lot of these measures that the Trump administration has taken against, be it Chinese companies or Chinese officials. And of course, the tariffs that remain in place. President-elect Biden has already commented in a previous interview that he probably won't be rolling those back in a hurry. But I think also, Francine, the other point when it comes to U.S. and China relations is that there's also a feeling the U.S. administration will be focused on its home turf for a while, given what's happening with the U.S. economy and the societal division there. There's a feeling that perhaps China-U.S. relations may just go on hold for a while until the U.S. gets back on its feet, and then we'll see what direction President-elect Biden will take it in.
There are about 5 days left, and 4 working days actually in the Trump administration. Are they going to go after more Chinese companies?
You're absolutely right, Francine. I mean, given this latest step on Xiaomi, it does appear as though the Trump administration wants to go out leaving as many hawkish policies in place as they can. We know that the Secretary of State, Mike Pompeo, said before Christmas that there was still more work to be done on the China front. We'll have to wait and see what they can do within the final week. They may make further moves in terms of blacklisting other Chinese companies, but I think most people observing this process from this side of the world are running down the clock now. They're waiting to see that whatever decisions are made by the Trump administration, they expect the Biden administration will have time in terms of whether or not they will implement them, or, as I said earlier, whether or not they may even reach a point where some can be reversed if relations with China get back on a more even keel as the year goes by. So you're right, people are still alive to the risk that the Trump administration will push through some final measures, but then I think we're also in something of a holding pattern to see where does President-elect Biden take relations between the two countries once he gets up and running in office.
And thank you so much, as always, Enda Curran, their Chief Asia Economics Correspondent, with some great insights. More Bloomberg surveillance next. I'll be joined by Tom Keene in New York. another day of risk off across the financial markets, we bring you special coverage of all the price action and implications here on Bloomberg Television. President-elect Biden unveils his long-awaited stimulus plan. The aid package totals nearly $2 trillion. Global virus deaths near 2 million. France tightens restrictions. Germany may follow. And shares in Xiaomi plunge. The Trump administration blacklists China's smartphone giant in a surprise move. Well, good morning, everyone, and happy Friday, everyone. It's been a long and tedious week. Certainly, I just saw a note, Tom, by Kit Jukes saying the markets are tired by politics are alive and kicking.
We do. We read Kit Jukes together in the morning, and I thought he was really on about just a worn-out market with all the movement that we saw, the gains we saw in equities last year, some of the big figure moves in foreign exchange. It's just one of those weeks of churning. I would suggest, Francine, on a market basis, it's almost healthy as we move forward off the Biden speech here. But the real uproar, Francine, here, and you got to tell me about Downing Street. Every time a president moves out of the White House, whatever, there's always an uproar about furniture. There was 20 years ago when the Clintons moved out. They had to return a few pieces and, you know, blah, blah, blah. When people leave Downing Street, do they take stuff?
Well, first of all, Tom, as far as I'm aware, you know, they don't redecorate Downing Street, so there's not much to take with you. I mean, I've been in Downing Street, kind of for the last 15 years, so I've seen 4 or 5 prime ministers living there. So you have the private quarters, which are much smaller than the White House, and they bring their own things and then they take them out. But the actual Downing Street, the meeting rooms and stuff, no one takes anything, as far as I'm aware.
Yeah, that's the way to do it. You're doing it better than us. A big uproar. We'll talk about it through the show today. It's a lot. It is a fun moment within all the drama of Washington.
Yeah, more light than the news certainly we saw in the last 10 days. Tom, let's get straight to the Bloomberg. First word news in New York City is Ritika Gupta. Hi, Ritika.
Hi, Francine. President-elect Biden will go big in his first major piece of legislation. He will ask Congress for a $1.9 trillion for the next coronavirus relief package. The measure includes $400 billion for coronavirus management, more than $1 trillion in direct relief spending, and $440 billion for communities and business. It's twice as big as the stimulus bill passed last month, and it's expected to attract swift Republican opposition. And President Trump plans to leave his Mar-a-Lago resort in Florida after he leaves the White House. The plan now calls for him to fly there the morning of the inauguration. Several current members of his staff are expected to work for him or his son-in-law, Jared Kushner. The world is about to hit a terrifying benchmark. The death toll from the coronavirus is about to surpass 2 million, and there are few expectations for the numbers to start dropping soon. The U.S. leads the way with almost 390,000 deaths. Experts say even with vaccinations, the odds are slim that the outbreak will be controlled before the summer. And the economy in China is beating the world. A year after its first coronavirus lockdowns, on Monday, China is expected to report that GDP rose 2.1% in 2020. That would make it the only major economy to have avoided a contraction. China's success in controlling the coronavirus has allowed it to boost its share of global trade and investment. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom?
Riddick, thanks so much. One data screen today. As Kitchuk said, it's a quiet market. It is a quiet market. A little bit of a softness to it. Futures in 11, Dow futures in 83, and the 10-year comes in churning through the week in 2 basis points, 1.11%. It's just a quieter market. I got nothing more to say. I mean, I guess Bitcoin, Francine, 38,605 on Bitcoin.
I have Bitcoin. Tom, it's like you're reading my mind.
I took your Bitcoin,
I had Bitcoin
thunder.
Fluctuating. There you go, 38,000 after recovering from this week's rapid plunge. Overall, Tom, European stocks following Asian shares and U.S. futures lower. I think a lot of the size of the package was priced in, and so there's a lot more concern, I guess, about it now being watered down under congressional opposition. And I'm hearing more and more questions about taxes rising in the U.S. So that's probably where I would point our focus on when looking at the markets. And then a bit of data also a little bit later. Now, President-elect Joe Biden will ask Congress for $1.9 trillion to fund immediate relief for the pandemic-racked economy. The stimulus plan includes $2,000 checks to individuals, $350 billion in state aid, and $130 billion to reopen schools. Well, let's get straight to our Jack Fitzpatrick, who's been covering this for us from the very beginning. He's our Bloomberg congressional reporter. Jack, I have a million questions about actually how many moderate Republicans will support this, but your initial feeling is how much of this can actually get through?
This is a big package that's more in line with Democratic principles than Republican ones. We haven't heard a ton of feedback from Republicans just as of last night, but there is pushback. The direct payments, the unemployment stuff, $350 billion for state and local governments, that's the stuff that is probably going to push away a good number of Republicans. So it's interesting that they decided to try to do this in a bipartisan way rather than the budget reconciliation route. But this is more of a list you'd expect from Democrats than, bipartisan Republicans.
Jack, any insight into what the Biden administration would be willing to compromise on?
Well, it was a little bit of a surprise that they called for the inclusion of a minimum wage increase in this package that was COVID related. On one hand, some of the stuff I just mentioned is stuff they would have to compromise in order to get Republican votes. On the other hand, they may compromise on their stated goal of getting as many Republican votes as is necessary to get 60 votes in the Senate. They may go the budget reconciliation route and have to pull some things out that don't qualify for budget reconciliation, which would be some health care funds and some of the other stuff. So that's really a tactical decision that I don't think they've made yet.
Jack, thank you so much for bringing it up. Folks, what I know is the quickest way for you to turn the channel off of Bloomberg surveillance is a discussion of budget reconciliation. It is Greek. Jack, 1974, they introduced reconciliation. The Byrd rule is important. Senator Byrd of the Virginias. Fine. If they use reconciliation, do we go through a normal Washington process of committees and powerful chairmen and chairwomen, or is this going to be an original budget process wrapped around reconciliation?
So they can do a shell budget. They don't have to go through regular order, really, to go through reconciliation. These days, the point of reconciliation is essentially to be more partisan than bipartisan, but it would pull in the budget chairman in the House and Senate, which means Bernie Sanders in the Senate, who's pushing for very, very aggressive aid. If they want to go the more partisan route, it's notable that the instructions originally would have to be written by Bernie Sanders.
Okay, really, and we're going to get into this, folks, as we go to the State of the Union speech in February. You just assume, Jack Fitzpatrick, that whatever the number is, there's a follow-on many billions off the State of the Union for infrastructure.
Yes, that's something that the Biden team has mentioned, is that there's going to be a call for more later. And there's been a lot of talk on not necessarily a COVID-specific stimulus package, but something probably broadly focused around infrastructure, especially green infrastructure, maybe clean energy spending included in that. That is also something that I think they're probably even more likely to try to push through with a simple majority in the Senate and go through that reconciliation route rather than trying to get up to 60 and getting a bunch of Republicans.
Jack, at the margins, in the markets, they're also worried about tax hikes in the U.S. I mean, what's the thinking on that?
You know, I've heard for a while from some Democrats that they don't think it makes sense to impose an immediate tax hike even on the wealthy or big corporations because we're trying to recover from a recession. I will say just a couple days ago, I asked Bernie Sanders, who would be writing these instructions for major legislation, and he says he sees no reason to wait. His focus is the wealthiest people and big corporations, and he says, why not raise revenue in the very, very near future? So that's a debate that Democrats are going to have in terms of, do you want to pull any money out of the economy and try to get more tax revenue now, or do you pass legislation now that says a few years down the road these could come into effect? But they clearly haven't entirely decided on that.
Thank you so much for all of your reporting there, our Bloomberg congressional reporter, Jack Fitzpatrick. Now, we'll have plenty more, of course, on that. And Tom, I've also went to the definitive source on UK politics. Tim Ross has answered the question on whether prime ministers at Downing Street can take furniture. So we'll talk about that shortly. This is Bloomberg.
Continues to be, recovering well. And with the opening up that was decided at the last 5-year plan, that is a golden opportunity for many international banks.
So we'll look to double our footprint across IB and also wealth management and asset management in the 3 to 5 year time frame.
Growth outlook structurally is very strong. But it does need to consolidate and allow time to help the share price appreciation to move more in sync with the growth.
So China can avoid further decoupling if they stop these inappropriate actions.
But at the moment, we really want to see the dust settle first on international relationships, on China's role in the global economy.
I don't see a likelihood of a big change in the policy with the change of administrations.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I've said to other women as they've taken on their CEO roles, I said, get ready, because everything you do is magnified, everything you do is personalized. I can't tell you that that's fair, but it's what happens.
Bloomberg Surveillance. Good morning, everyone. From London, from New York. It is January 15th. Francine and I agree it feels like March 20th. It has been that kind of first 15 days of the year. And maybe this is the first quiet day. A lovely Friday. Yes, there's news out of Washington. There's other news around the world. But maybe it's a time to actually reassess where we are in the markets. Mark Dowding is with Bloomberg Asset Management, their chief investment officer. We're thrilled he could join us this morning. Mark, I really need a thoughtful discussion after the craziness of Washington and all. Have you adapted your allocation from your original view of 2021?
Well, I think the honest truth is no, not very much. We came into this year thinking that in the first part of the year we would witness a market backdrop where markets would be supported by ongoing policy accommodation on the one hand, and the hope that things get better later in the year on the other hand. And that's a powerful combination which is pretty constructive for risk assets, and we think can actually be generally quite supportive over the course of the next couple of months. For ourselves, what we're much more concerned about is later in the year, if you do see more of a reflation trade which lift yields more substantially, could you be in a situation where at that juncture in time, we've spoken about a K-shaped trajectory in 2020 where Wall Street does very well as Main Street suffers. Could you see an inversion of flipping of that K? Is it going to be when the economy is strong? Is that going to be the moment when financial markets find it much more heavy going? So later in the year, we're more cautious, but in the here and now, we actually think that we could see a continuation of what we saw over the course of the last couple of months, because in the near term, the trajectory on the virus is going to mean that policy support stays with us, at least for some time yet ahead.
The ambiguity of higher interest rates being good for banks, being good for corporate business, signaling a better nominal GDP, all the different things that are in the textbook. At what level of U.S. 10-year yield do we signal a different ambiguity? Is it a 150? Is it a 2? Or is it something back a decade or so?
Well, I think part of this is the speed of any move that may occur. And in the course of the last few weeks, we've seen US Treasury yields move higher. We had got a target of yields moving up to 110 on the 10-year note, which they reached at the back end of last week, which is where we booked profits on a short that we were running ourselves in terms of US rates. We think for the time being, they should be between 1% and 1.25 on the 10-year, because we think that if yields do move higher than this in the near term, it's going to start weighing on risk assets and potentially tightening financial conditions. And I think we started to see that at the early part of this week, which is why we weren't surprised to see a number of Fed speakers over recent days really trying to reassure markets there wouldn't be an end or an early end to the policies of accommodation. And from that point of view, it seems to have brought a bit more stability back to yields. But the question about where will yields be at the end of the year, we certainly think that after a range-bound first quarter, they will resume their rise as we move through the year. They will end up higher. And at some point, we do think that that is going to have an impact on other assets more generally. And as mentioned, last year was a year where we saw strong beta returns on the back of liquidity, financial asset inflation on the back of central bank easing and buying of assets. When you pass the inflection point where central banks aren't giving more additional accommodation, we actually think that there is potential for a retracement, but that's later in the year. I think in the here and now, even as the days are dark and gloomy in the middle of January, I still think this is a time for making money. As things get sunnier for the rest of us later in the year, this potentially is going to be the time to be more cautious. So that would be the narrative that we run with as we come into the start of 2021.
Mark, is there a danger that the markets actually confuse reflation with inflation?
I think there certainly is that risk, yes. Francine, the backdrop there is that reflation is all about sort of getting growth coming back, and you can have reflation and you can have stronger growth without necessarily igniting the fires of inflation and price pressures themselves. And frankly, at a time when unemployment is very elevated, it's unlikely we're going to be seeing big gains in terms of wages. And therefore, I don't think we should be fearing that inflation is going to be running off to the races. And also, although we've seen inflation expectations, as shown on inflation-linked bonds, move to the point where we are pricing inflation at around about 2%. I don't think there's anything to get overly concerned about when it comes to inflation taking off anytime soon. But the idea that the Fed is going to be behind the curve in this cycle, ultimately, we do think should push inflation north of 2.
Mark Dowding with us, and we will continue here, a reset here on a quieter Friday. Futures -12, yields come in a little bit, but, peace on earth as we go through this tumultuous January. I do want to point out Operation Warp Speed started in May. This is the speeding of the vaccine forward. David Kessler, with all of his work at FDA. David, Dr. Kessler will lead Operation Warp Speed for President Biden. Coming up on Bloomberg Markets, Mohammed El-Arian of the University of Cambridge and Bloomberg opinion columnist. Good morning. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
How different will the beauty market be in 2-3 years?
We'll see. It's too early to tell. But I would bet that they won't change fundamentally. I have been through many crises, and it won't be very different.
This is the 1980s all over again, to make sure that we keep our hands firmly on the driving wheel.
I do not see demand coming back to the pre-COVID level anywhere earlier than
a demand recovery. Then I think the market can absorb it.
A sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
I'm bullish about 2021 overall. And that's really dependent, though, on COVID. We've got some really hard months ahead of us. The second half is going to be a robust growth, but I want to remind everybody it's a deep hole. So even with robust growth, we're going to take some time to fully dig ourselves out of it and get back to where we were prior to COVID. A little inflation right now would be a welcome thing. Remember, we came through a 10-year expansion where we couldn't get inflation up to target. I'm more confident now that with our new framework review that we released in August and with the support that we're giving, that we'll get inflation fully back up to 2%. But I am not at all worried that there's this run up in inflation around the corner that we will need to preemptively stave off.
Well, that was the San Francisco Fed President, Mary Daly, and it goes back to the conversation that we were having with Mark Dowding of Blue Bay Asset Management about inflation versus reflation, and Tom also asking about some of the good assets or some of the value that he saw out there. Mark, what do you do with European fixed income right now?
So in terms of European fixed income, I think it's a quieter story, frankly. I think that whereas we're seeing a more expansionary fiscal path in the US, I think in Europe, there's more of a likelihood that actually, as we move later in the year, Northern European countries are actually going to want to take back some of the fiscal easing that we've seen to date. So we could actually see the US economy materially outpacing Europe, we believe, over the course of 2021. And so that means, although we may see a move up in US yields, we don't think very much is going to change in the context of Euro fixed income. And therefore, I think the message is going to continue to be about a grab for yield, a reach for yield. We continue to like things, assets within Euro fixed income, like subordinated financials, COCOs, for example. This is an area where yields remain most attractive. But generally speaking, we think there is more compression to be had in some of the parts of the credit market in the context of the Eurozone.
Is there anything, Mark, that makes you, I guess, worried about, maybe some of the expectations about the size of stimulus that we'll get in the U.S.?
So I think obviously overnight we've had the number of 1.9. I'm pretty sure that 1.9 isn't going to be the number that we get. That's an opening gambit. I think a figure closer to $1 trillion is likely in the context of the first package that Biden is going to want to work upon. But we do have a real sense that there will be further fiscal measures that follow thereafter. We think there'll be a supplemental package later in the year that will be focused more on infrastructure spend and on the green economy. And I do really think that it's significant that with Yellen at the Fed, if you think about Yellen's posting there, I do think that she's seen as someone who's very fiscally conservative, quite parsimonious with her own finances, leading a pretty modest lifestyle. I think that she'll be able to do a job that actually sells to the American public and to some Republican senators that actually the US can afford a more expansive fiscal trajectory over the course of the next several years because of the low level of funding costs. And with monetary policy not particularly effective, I think fiscal policy has got a real role to play. So actually, over the medium term, I think there's still more to be done on the fiscal side in the US.
This has been wonderful, Mark Dowding. Thank you for the adjustment here on a Friday. Blue Bay Asset Management CIO, Mark Dowding. It has crept up on us with all the distractions, and that is the banks report. Francine, I have been hugely remiss in getting up to speed on this. I've got to do a quick study. JP Morgan before 7 o'clock, Citigroup and Wells Fargo together at 8 o'clock as well, helping us drive forward the discussion. We've got a great team set up to inform you on the performance of the big banks. Ken Leon of CFRA will lead off here. That's very important. Really looking forward to speaking to Mr. Leon here. Before we hear from JP Morgan, he'll provide assistance through that hour as well. Futures in -14, the VIX 23.74. Stay with us from London, from New York. This is Bloomberg.
更知道我的网名叫做望京博客。我开始做直播是在今年年初的时候，主要是去年的话，可能参加更多的是线下的活动。今年大家都知道，由于中国的这个疫情，导致这些线下活动不能办了，所以更多的交流方式在线上。就今年春节之后，主要是开始在线上通过直播的方式跟粉丝进行交流。直播可能对于投资者来说是陪伴投资者，大家讲讲市场啊，讲讲投资的心理啊，这样的话就可以让大家在投资的时候，心情更平缓。平缓的话，能做到长期持有；长期持有的话，才可能赚钱。相对而言，线上可能覆盖的人群更多，因为可能疫情，很多人在家里看直播的人更多。反而可能，我这个工作可能是反而是受益于疫情的一个工作吧。
明天希望高开赚钱，
祝大家赚大钱。
Really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, Tom, the chief overseer of the largest U.S. banks is infuriating Wall Street. Now, in his last days of the Trump administration, Brian Brooks has finalized a rule that prohibits banks from shunning gun, oil companies, and other controversial industries that some have refused to do business with. Joining us now is Elisa Martinuzzi, Bloomberg opinion columnist. Elisa, I read the story about 2 times this morning to try and figure out exactly what this meant and whether I had missed something. Did this just come out of the blue suddenly by decree, the Trump administration deciding that all Wall Street needs to lend even to controversial industries?
Well, I think, part of, you hit the nail on the head there. Part of the concern here is that this was certainly rushed through and there wasn't enough time for people to sort of to weigh in and for those and those concerns to be aired and considered properly. I mean, the worry is that the bigger banks here, the banks that have assets greater than 100 billion, now find themselves in a situation in which they cannot outright boycott and walk away from certain industries. And those industries being specifically the gun makers and some of the energy companies that have been singled out as being targeted by these boycotts. And the concern really is that, yes, the banks are somehow prohibited or, yes, find it more difficult to make their own business decisions as to who they want to lend to.
What does it mean for the Biden administration? I mean, if you're pushing for climate change and if you're pushing for, banks to actually do more to combat it, this is the reverse of useful. Can they just change that law? Can they walk it back fairly quickly?
Yes, I think, the silver lining here is that, critics of the rule point to the fact that there are several ways that this can be opposed, both legally and it may never actually come into force. So I think, there is potential here for this rule never really to take effect. But you can see why both, across, the consumer groups, the Democrats and the banking industry were united in their concerns about the potential implications of such a rule.
You nailed it, as you always do, Elisa. It's probably not going to go into effect. It's just a lot of political posturing, period. Let us move on. Eliza, we're going to get bank earnings out here through the morning. 3 big banks. How are the American banks doing in Europe?
Well, American banks on the whole are doing pretty well. If you look at, look at the numbers, for 2020, which we'll have confirmation of later today, it's been remarkable how they have weathered the health crisis and the economic crisis, clearly bolstered by, the next infinite QE and fiscal stimulus. And in particular, what that has helped has been their trading businesses, which, of course, have been bringing in record revenue, and that has really helped the bottom line here in light of the huge provisions they've also had to take.
But if I go into Germany and I'm a business, I'm a big business, I'm a middle business, a small business, whatever, is JP Morgan or Citibank in my decision tree of doing banking business versus German banks?
Oh, for sure. I mean, I think there's some anecdotal evidence of, slight retreat. But, absolutely, they are still the global lenders that European companies will look to because, of course, there are few global lenders that remain among the European firms. Probably BNP is the one standout. But if you look elsewhere, Deutsche Bank has retreated, of course. Barclays has retreated, of course. So you really aren't left with many domestic choices. And so you have to include those U.S. firms.
Elisa, we talk about cross-border consolidation in Europe. Would a cross-border, cross-Atlantic, actually, consolidation even make sense?
Well, I think, if you look at these potential tie-ups on paper, some of them would make an awful lot of sense, particularly across borders in Europe. Now, whether they're actually, doable both from a regulatory standpoint, because of the hurdles that still remain to moving capital around freely across Europe. And then, you need to consider the cultural clashes, which, across Europe would still be quite considerable. And then add to that the cost and the distraction of executing those at a time in which banks are under a lot of pressure. All that points to it being very difficult for these deals to happen.
Elisa, thank you so much. Elisa Martinuzzi there with the very latest, of course, and all these banks are from our Bloomberg Opinion column. Now, let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. President-elect Biden has unveiled a $1.9 trillion coronavirus relief plan. The question is, what will be the price tag be too high for Republicans? The measure includes money for the coronavirus outbreak and direct relief for families, businesses, and communities. The president-elect campaigned as a deal maker and is hoping to get some Republican support for his plan. President-elect Biden calls the vaccination effort a dismal failure, and he has outlined plans for a $20 billion immunization program. He's asking for more money for testing, contact tracing, and to help schools reopen. The Biden administration wants to distribute 100 million shots in its first 100 days. And House Speaker Nancy Pelosi and Senate Majority Leader Mitch McConnell are silent about what's next in the impeachment process. Pelosi hasn't said when she'll send the article of impeachment to the Senate. McConnell isn't talking either. After the inauguration, Democrats will be in charge of the Senate, meaning they'll be handling the trial of President Trump after he leaves office. And in the UK, Prime Minister Boris Johnson faces a threat to his leadership from rebels in his Conservative Party. They're demanding a clear path out of the country's economically damaging lockdown. One lawmaker, Steve Baker, said in a letter to Conservative colleagues, it could be a disaster if pandemic restrictions last till spring. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine.
Ritika, thanks so much. Now, coming up, Italy's government hangs in the balance. We speak with the former Prime Minister Enrico Letta. This is Bloomberg.
during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Tom Keane in New York. Tom, Italy's embattled government is pushing for an even bigger than expected deficit expansion. Now, this comes in the wake of the dramatic political impasse sparked by former Premier Matteo Renzi. The move robbed Conte of a working majority, leaving his administration in limbo. Well, joining us now, we're delighted, is Enrico Letta. He's Dean of the Paris School of International Affairs at Sciences Po and former Prime Minister of Italy. Mr. Letta, as always, thank you so much for joining us. Italian politics is almost impossible to understand when you're outside Italy, even for most Italians. So I'm glad we have a former Prime Minister try and explain exactly what the options are. Is it a real possibility that we go to election? The market seems to have discounted that. Is there a unique Italian way for this government to go ahead?
You know, Italy is a country with a constitution that gives the parliament the center of everything. So the parliament means that next Tuesday will be the day of truth, because next Tuesday Prime Minister Conte will ask parliament to have the confidence vote. You know that Matteo Renzi party, a small party, is trying to challenge Conte, and so they decided to withdraw their confidence vote. So the key point is Conte able to substitute these votes with other votes in parliament or not? If he does, Conte's government will last and will continue, and Conte will lead the G20, because this year Italy is the chairman of the chair of the G20, and the country will and the government will manage also the recovery fund and so on and so forth. If he doesn't, there are two options: a new government or new elections. So at the end of the day, you have three options: Conte continuing, a new government after Conte, and third, new elections. I don't know if it is clear, but it is not very simple.
It is clear. It is clear. Well, I'll wait for Tom to say it's clear. I've been following this quite closely, Mr. Letta, but how important is it that you have stability at this moment to take care of the pandemic, but even more importantly, to make sure that the funds dispersed by the recovery fund, that frankly also have attachments to it, are dispersed in the right way to relaunch the Italian economy?
What is important to know is that because of the rules and the way in which the constitution is done, to have a new government or to have new elections, you need time. So the key point is that can the country allow in this very moment a waste of time for negotiations for the creation of a new government, maybe with a new majority in the parliament, or a long electoral campaign and new elections, and then other negotiations to have a new government. So the key point is timing. Managing the pandemic with the big risk of the third wave, and managing the recovery fund, applying the recovery fund, having a good spending of all this money and trying to relaunch economy needs stability and needs a government in place. So the key point is that, this is my view, it is today very complicated to spend 1 month, 2 months, 3 months in political negotiations without a government, an effective and functioning government. This is why the big risk today, and this is why the big risk not only for Italy but also for Europe, because Italy's collapse or Italy's crisis will worry Europe very much.
I mean, I don't know whether it's wishful thinking or something that could actually happen, but you certainly hear in the markets that, you know, there could be some kind of hope about a technocratic government also led by Mario Draghi. Could you speak to us about the difficulties of actually managing a technocratic government? How much of a nightmare actually is it?
Frankly speaking, I don't know. The key point is that this parliament is a parliament where Five Stars movement is at 35%, and the Lega of Salvini is at 17%. So more than 50% of the member of parliament are coming or from Five Stars or from Lega. So it is a parliament that is, in my view, not very easy for a technocratic government. It is a completely different parliament from the one that allowed Mr. Monti 8 years ago to run a government in another very difficult situation. So you have to take into account the fact that this parliament is a different one, and this is why it is not easy to foresee a technocratic government today.
Professor Letta, Tom Keene in New York, thank you so much for joining us. I only ask for more nonstop flights from New York to Venice. President Trump is leaving, and there is the image of the president in Sicily at the G7 meeting, standing up the other leaders, arriving in a golf cart, etc. There is a Trump method. Has the Trump style begun to adapt or adjust Italian politics? Has any of that rubbed off on the discourse of Italian discussion?
I think so. I think there's, in these very years, there was a big influence in terms of behaviors, languages, disruptures, and of course, I don't like it. I don't like this kind of behaviors, this kind of languages. But yes, it was a model, and it is still a model, even if today, of course, what happened in the US is changing also the way in which in Italy what Trump represents is considered and is welcomed or refused. But, you mentioned G7, and I take the opportunity to say that Italy this year will lead G20, and it is the opportunity to relaunch the G7 or G20 that were under attack in the period of Trump, and Biden will be there. The G20 under the Italian presidency will be the first and maybe unique moment where Biden, Xi Jinping, and the European leaders will meet together. This is why I think the role of Italy this year is important, and this is why I don't see, frankly speaking, a crisis like something useful. I think this crisis is irresponsible, a little bit crazy too.
Enrico Letta, thank you so much. The former Prime Minister of Italy there stays with us, and we'll talk a little bit more about, of course, international matters, including how Europe fits in this U.S.-China trade war. Now, coming up on the U.S. close, we speak with Guggenheim's Scott Minerd. Does he stand by his big, bold call that Bitcoin would hit $400,000? I think they'll focus on Bitcoin. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This is Bloomberg Surveillance. I'm Ritika Gupta with your Bloomberg Business Flash. Wedbush says that Tesla stock could hit $1,250 in a bull case scenario. Shares rose almost 750% last year and closed yesterday at $845. Wedbush's Dan Ives wrote that, quote, the heart and lungs of the Tesla bull thesis is centered around China. General Electric is accusing the U.S. unit of Siemens Energy of stealing trade secrets. A lawsuit claims that Siemens Energy used the secrets to win at least 9 gas turbine contracts worth billions of dollars. The company says it hasn't seen the lawsuit yet, but says its integrity won't be compromised under any circumstance. And Canada's Couche-Tard is trying to diffuse French political concerns over that proposed $20 billion takeover of Carrefour. Bloomberg's learned that the Canadian convenience store operator will pump $3.6 billion into the French retailer. Couche-Tard's bid will prioritize investment cost cuts or job reductions. And that is your Bloomberg Business Flash. Tom?
Ritika, thank you so much. He grew up in a house of mathematics in Italy. Enrico Letta is the former Prime Minister of the Italian Republic, now holding court at the Paris School of International Affairs, Sciences Po, and we're thrilled that he could continue with us this morning. Mr. Letta, as you know, Italy is a magnet for China tourism. I believe in 2019 and into 20, year over year, I think travel is up 16%. It is a boom relationship. And now there are new guidelines. There is a relationship of China to the United States and China to Europe as well. Close the triangle. How will Europe and the United States fare as they discuss China?
I think it's one of the big changes from Trump and Biden in terms, first of all, of method, procedure. Trump challenged China without any discussion with Europeans. China is a topic, it's a very complex topic for all of us. My point is that I think that can be the way to relaunch the role of G7. G7 is a sort of missing in action in the last years because of Trump too. But G7 is the only place where you have Japan, North America and Europeans together. And my feeling is that maybe is the right place to have a discussion, an evaluation, and the way to manage a common position of the Western countries towards China on technology, on protectionism, on security, on many issues. So I think that can be the right place and the right way. Of course, for me, what is very important is the fact that we will have also the first meeting between Biden, Xi Jinping, and the Europeans at the G20 hosted by Italy this year. So it's time to talk. I don't know if these talks would give positive solutions, but it is time to talk. And as you know, the European Union, the day before the end of last year, decided to sign or to announce a big agreement with China on investments, on rules of investment. So we have to try to have common positions between European and Americans on that.
But what does that mean for Europe's relationship with China, Mr. Letta? I mean, do we need to choose as Europeans where our allegiance lies?
I think there's no choice. The Europeans are with the Americans. The transatlantic tie is so strong, and it is more strong today with Biden. It is clear. But I think it's the interest of both to try to find solutions to avoid new Cold Wars or tense situations with the Chinese. And I think if we are together, we are strong enough to oblige Chinese to find positive solutions and peaceful solutions on many issues like technology, security, trade. So it will be a question mark. It will be one of the most important question marks in terms of topics for the future. But I'm sure that the US administration, the Biden administration, and Europeans can find a common track on this topic.
Nicoletta, there's so much politics news, right? So we looked at the riots, of course, on Capitol Hill. We talk about U.S.-China trade, also the China relationship with Hong Kong. And then there are things that we frankly just haven't really talked about, or that the news flow kind of swept under a carpet, which is the South China Sea, which is the Middle East and all of some of the hot points that we used to look at. What do you worry we're underestimating? There's also a big election in Germany this year.
I think human rights, you mentioned Hong Kong, is a crucial issue. But I would like to underline the fact that November the 15th, 15 great countries, the 10 countries of ASEAN, China, South Korea, Japan, Australia, New Zealand, signed this enormous new agreement, the RCEP. It's something of completely new. It is another question mark, but maybe it is a change in what is happening in Asia. My point is that it was the first move for the post-COVID world. It's a move in terms of multilateralism, in terms of it was the way also for these countries to substitute the US with China, because it was the first idea was coming from Obama 5 years ago. It is the way for them also maybe to try to find a framework to have peaceful discussions among them. You mentioned Germany. The elections this year, September, will be the most important elections in Europe. Yes, you're right.
Well, after September, Prime Minister, we will move on to October, and hopefully Francine and I in Rome for G20 meetings. We're inviting ourselves right now. Professor Letta, thank you so much. Greatly appreciated on this important Friday. Futures -13, Dow Futures -98. On the markets, and particularly his thoughts on commodities. Michael Shaul next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This morning, things changed after the elections of November 3rd and January 5th. A heated debate of billions has become a near certain $2 trillion of stimulus, more billions and trillions coming as President Biden, quote, gives to Congress information of the State of the Union come February. Financial markets quiet. They adjust to new debt yields a little bit lower. A firm moonshot revolves from 90 to 137 to 114. And Lincoln is missing. Camp Trump exit the White House. They say is a bust of Lincoln, the Borglum bust, the guy that built Mount Rushmore. Would someone please count the silverware? Shades of the Clintons 20 years ago. Good morning, everyone. Bloomberg Surveillance. I'm Tom Keene in New York. Francine Lacroix in London. And Francine, I'm sorry, this happens every time there's a changing of the guard at the White House. It happened with the Clintons 20 years ago, worried about, I think, 4 pieces of furniture. Jefferson furnished Monticello coming out of the White House. He actually did that. Does this happen on Downing Street?
It doesn't. I was going to say this is uniquely American, Tom, if you look at Downing Street, but I did become a bit smarter about exactly some of the controversies in the UK. One of my favorite lists, actually there are 2 lists that I look at almost every year. One is the gift list. So they basically publish for transparency everything that a prime minister has given. And then if it's of the value above £140, then they decide whether they keep it, but they have to pay for it at face value. I mean, I think I was looking through Theresa May, but also who, love of fashion was very well known, and so she was gifted a lot of shoes, as far as I'm aware. Her predecessor was given a lot of iPads. I think in 1 year he received 7, and decided to buy one. So it's interesting. And the other list, actually, Tom, is the most incredible things forgotten on the tube. I don't know if you've ever heard of that, but they even found a full submarine guards on a tube that was just left there, and they also publish that every year. Uniquely,
absolutely fascinating.
British.
And of course, this is some of the fun as we go to the inauguration. David Weston and Kevin Cirilli leading our coverage up to January 20th. I looked at the bill for overtime for the movers, and I believe it clocks in at $55,000. That's about what Ritika Gupta paid the last time she moved. With our First Word News in New York, here's Ritika Gupta.
Good morning, Tom, Francine. President-elect Biden will go big in his first major piece of legislation. He will ask Congress for $1.9 trillion for the next coronavirus relief package. The measure includes $400 billion for coronavirus management, more than $1 trillion in direct relief spending, and $440 billion for communities and business. It's twice as big as the stimulus bill passed last month, and it's expected to attract swift Republican opposition. President Trump plans to live at his Mar-a-Lago resort in Florida after he leaves the White House. The plan now calls for him to fly there the morning of the inauguration. Several current members of his staff are expected to work for him or his son-in-law, Jared Kushner. The world is about to hit a terrifying benchmark. The death toll from the coronavirus is about to surpass 2 million, and there are few expectations for the numbers to start dropping soon. The U.S. leads the way with almost 390,000 deaths. Experts say that even with vaccinations, the odds are slim that the outbreak will be controlled before the summer. And the economy in China is beating the world a year after its first coronavirus lockdowns. On Monday, China is expected to report that GDP rose 2.1% in 2020. That would make it the only major economy to have avoided a contraction. China's success in controlling the coronavirus has allowed it to boost its share of global trade and investment. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom?
Hi, Ritika, thanks so much. For the first time in ages, one data screen. That's how quiet it is. The VIX, 23.71, going nowhere this week. Futures in 15. I'm going to call it somewhat correlated with yields in 2 basis points, 1.11% on the 10-year. I'm struggling here. I'm going to leave Bitcoin to Francine because she believes in Bitcoin and I don't. Francine?
Well, I don't know if I believe in it, but don't steal my thunder, Tom. It's the only thing that's moving. And
exactly.
It's quite interesting to talk about. Bitcoin fluctuating, currently around $38,000 after recovering from the rapid plunge that we saw earlier in the week. Now, overall, European stocks, Tom, are fluctuating. I know it's not huge, but they are a little bit lower. And it's interesting for me that the narrative has shifted from, wow, we have a relief package from Joe Biden that's almost at $2 trillion, to, wait, what happens next? Are they going to water it down because there will be pushback from Republicans? And also, are we going to see taxes rising to fund it? So it's interesting to see that shift in the debate, Tom.
A State of the Union address in February, and a first one for any president, is always interesting, always eventful. Here is a State of the Crisis address by the president-elect.
The crisis of deep human suffering is in plain sight. And there's no time to waste. We have to act, and we have to act now. You know, I know what I just described does not come cheaply, but failure to do so will cost us dearly. We will pay for that by making sure that everyone pays their fair share, not punishing anybody.
Joe Biden to be president here in a number of days. Joining us now, our executive managing editor-at-large, Martin Schenker, who's had an eventful week. He and I notice it's a bit quieter today.
It is.
It's nice to have a quiet Friday, isn't it?
Yeah, but in our business, saying something like that is really dangerous.
Jinx.
I want to give our international audience, Marty, a window here. And, I just to get away for one moment from the zaniness of the week. The Bidens will go into Blair House.
Yep.
The State Department has said, please, you're not staying in a damn hotel. You're going in Blair House. For our international audience, please explain the symbolism of Blair House.
So Blair House is the place, is the staging area where, just a few hundred yards from the White House. And it's steeped in tradition. It's where vice presidents often reside before they take office, and it's normal. It's
normal. It's well
normal.
said. This is why we love having you on.
It is what has happened, for almost 200 years in this country.
Yeah.
And it's the staging area for the ascension to the presidency.
Little things. Run the video again of Mr. Biden behind us as Martin Schenker and I speak right now. Little things matter, and the placement of the flags behind the president-elect is different.
It is
than the present president, isn't it?
It is.
Please discuss.
It is quite a different backdrop from what Donald Trump uses, and it again speaks to the issue that Joe Biden thinks his biggest challenge is to bring this country back to some semblance of normalcy and bipartisanship, and he's going to be tested on this economic plan.
On the stimulus.
Yep.
Marty, what exactly, we know what's in the economic plan, but how many Republicans will be moderate and vote for it? And if not, how much, how watered down will it be?
Well, it's interesting. I don't know. This plan in its entirety is not going to pass Congress. There are definitely pieces of it that will gain support of moderate Republicans and maybe some non-moderate Republicans. The stimulus checks is probably the easiest thing to get through Congress, and there will be a push to kind of split this package into pieces so that they can act quickly on the stimulus checks and then move on to the other things later. But it'll test Joe Biden's, experience in the Senate and his ability to work with across the aisle.
Do we need to talk about taxes, or is it too soon?
No, I think we need to talk about taxes. But again, raising taxes is not something that happens quickly or easily in Congress. It's going to take committee hearings. It's going to take, weeks or even months of debate. And then the real challenge is getting it passed. They will definitely need Republicans for that. And finding Republicans who will support a tax increase is going to be an interesting process.
I want to be delicate here and be careful because this bust has not been identified yet as the acclaimed Borglum bust of the White House. But C-SPAN caught this last night, the Marine holding the door, and out comes something. The debris is going to come out here in a moment. There we are. Marty, it always happens every time there's a changing of the guard. Something like this happens. It's an American tradition, isn't it?
It is an American tradition. I keep remembering the pieces of art that Donald Trump admired in the French ambassador's residence, and whether or not those are going to stay in the White House or not is going to be an interesting thing. It's not so much what Donald Trump is going to take, it's what he's going to give as well. Yeah. The pardons being among them in the next few days.
You and I were at a Christmas party once at the White House, and you didn't see me put the cocktail napkin in my pocket.
I still have that paper napkin in my pocket as well, Tom.
Marty Schenker, thank you so much. Our editor at large here on a Friday. We're finally, we can laugh deep into 2021. Coming up on the Open, Henry McVeigh. This is an important conversation. Henry McVeigh of KKR, head of asset allocation. That is an interesting twist. That'll be important. Futures at -17. This is Bloomberg. I still got that napkin in my pocket.
Continues to be, recovering well. And with the opening up that was decided at the last 5-year plan, that is a golden opportunity for many international banks.
So we'll look to double our footprint across IB and also wealth management and asset management in the 3 to 5 year time frame.
Growth outlook structurally is very strong. But it does need to consolidate and allow time to help the share price appreciation to move more in sync with the growth.
So China can avoid further decoupling if they stop these inappropriate actions.
But at the moment, we really want to see the dust settle first on international relationships, on China's role in the global economy.
I don't see a likelihood of a big change in the policy with the change of administrations.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Bloomberg Surveillance, good Friday to you from London and from New York. Francine Lacroix and I with some stability in the markets. Kit Jukes at SocGen talks it. Oh, a little tired, a little worn out, aren't we all? And what we're doing to get you ready for the weekend and to move forward is smart conversation on different themes. We can do that with Michael Shaul of Market Field Asset Management. Michael, I've been dying to talk to you about the commodity play because on this show, there is substantial disagreement about is it a commodity turn, is it the beginning of a commodity boom, or is it not? Have we finally broken the 10-year resistance on commodity pricing?
Yes, I think we have. I mean, I think this is a sustainable, strong rebound in the global durable goods economy. Had that position since the summer. And, if you look at on the production side, most of the major commodities, have had significant cutbacks. There's one caveat I'd put there would be China's demand for crude oil is, I think, somewhat price dependent. They were big buyers for strategic reasons when crude's price collapsed, in the middle of COVID. Some signs of a December trade report that they cut back on buying at the end of the year. But if I put that to one side, I think generally, this is the most favorable, I think, combination of events for commodities that we've seen really since they got going in that 2003, 2004 period.
With the ambiguity of that, does it cut into the rest of the world's cost side, or is it beneficial, signaling a greater global GDP, a greater global world trade?
I think the beginnings of commodity booms tend to correlate with much better global economic activity. So if you went back to 2004 when crude was knocking on the door of $40, the general economic view was as soon as it goes through 40, we have a global recession, which it just didn't make sense. What happened when crude broke out was there was a transfer of income and expense, away from consumers towards producers, and that's what commodity booms do. Is they redistribute income, they redistribute profitability, but they, certainly in their early and middle phases, correlate with much better global economic activity, and I think that's what we're going to see.
When will we see it, Michael? I mean, there are a number of cases, or of people questioning the vaccines given some of the new strains. I know it's early days yet, but if you're a market participant, do you have to hedge the possibility of exactly what we'll see over the next 6 to 8 months?
I think the first thing you need to do is realize that the COVID effect has actually accelerated the global durable goods economy. Again, when I'm talking about commodities, I'm not very sensitive to the pace of vaccination. I'm not sensitive to Governor Cuomo's decision as to how many people can eat inside a restaurant. What I'm really sensitive to are the big trends in global durable goods, which have already started to accelerate. Which have already started to accelerate. I think there's a big difference now between the service economy and the durable goods economy. They're really running off different drivers. One is much more, as I say, has been very depressed. Really, post-financial crisis, U.S. durable goods spending, because of housing more than anything else, never recovered its pre-financial crisis level. Last year, you had a 15% year-over-year increase through November. I mean, that's stunning. It's the sort of thing that you've really never seen in a normal period.
Will inflation take hold in 2021? The inflation we've been expecting for, over 3 years?
Yeah, I think the first thing we'll get is a headline rebound. I think that's a sort of mathematical quirk when the weakness from last year falls out. I think the what I would call the flexible part of CPI, the commodity-sensitive part of CPI, will be strong next year. Whether or not the service prices come back, I think their vaccination does matter. Things like air travel, education. There's a lot of service sector CPI which has definitely been dragged lower. The one part of CPI that I never really understand, and it's a big part, is shelter. You have this strange combination of very weak shelter CPI, which I would imagine is being driven down by urban rental values, and very strong house price appreciation. We saw a milder version of this divergence in the early 2000s, and in the end, shelter turned around. So, as I say, if shelter can stay where it is and maybe turn around in the middle, and the more commodity-driven portions of CPI can get going, then yeah, I think that the mid to late 2021, CPI in the high 2s to low 3s, I don't think is crazy. That would match PCE, which is what the Fed was about, in the mid 2s.
How does the Fed react to a CPI? Michael McKee's going to be on TV, Michael Schull, and McKee's going to go, inflation is 3.1%. You're telling me they're going to remain calm?
Well, first of all, they're going to point to PCE and say that they follow PCE, not CPI, and that therefore PCE inflation is really 2.5%. So there'll be a battle over the benchmark. And I think they will remain calm, particularly if they feel that it's, commodity-driven inflation, and which they're always inclined to view as transitory. I think that's, a little bit simplistic, but I think that the Fed has come out and said, and Powell clearly reiterated it yesterday, But they do not want to make another mistake of hiking too early or taking away quantitative easing too early. They are very much focused on the labor market. They're not even focused on a headline number like youth unemployment. They're focused on minority employment. But they really want to be part of a social engineering project to make this country fairer and better for the majority of people. You could say it's a laudable sociological aim. But it's an aim which is more likely to be inflationary than a typical Greenspan Fed or even an early Bernanke Fed.
But what part of the market, Michael, right now is running hot to worrying bubble levels?
I think the sort of degree of issuance and enthusiasm for issuance that we see, which is mostly technology. It's not exclusively technology. That's sort of worrying. I wouldn't be worried about the sorts of moves that you're seeing in commodities. I mean, you may have to have the kind of pullback that you saw in mid 2004. But generally, market cap globally is breaking out. We're seeing markets that the emerging market complex, for instance, has only just this week managed to surpass its 2007 high. So it's a 13-year secular bull market. Arguably turned into a secular bear market, rather, has just turned into a secular bull market. Is there trouble on the horizon? Yeah, I think if we get inflation, if we get rising rates, if you start to see pressures on price earnings multiples at some points in 2021, there is danger on the horizon. But right now, I still think we're in the inflating phase rather than the inflation phase of the cycle.
Great. Thank you so much, Michael Scholl there, Market Field Asset Management Chairman, Portfolio Manager, and Chief Executive. Now, coming up on Bloomberg Markets, Mohamed El-Erian, Bloomberg opinion columnist at 1 p.m. New York, that's 6 p.m. in London. He'll talk inflation and treasuries. This is Bloomberg.